Hey everyone, Mike Rosehart here for another installment of Wise Wealth Wednesday. As always, I'm here for you guys every single Wednesday. I show here to answer any questions on real estate, investing, personal finance, business, whatever you guys want to talk about. I'm here to chat with you guys about that. So I'm going to let you guys know that once we get everyone on, I know I'm a few minutes early today, but I feel bad for being late the last couple times, so I figured I would start on early and we'll let people kind of jump in. My thoughts are that on the real estate market. I'm going to chat a little bit about that. What's been going on here in Ontario. Hey Tom, how's it going? I see you jumped on. Nice. It's one of those things where I'm going to talk about my opinion on the real estate market. I'm going to let you guys know what I've been up to. We're going to have a little fireside chat. I used to always have these fireside chats when I worked in management consulting and the executive. They would talk about what was going on in the world, right? Hey, how's it going, Financial Wolf? But yeah, so we're gonna get going here pretty soon. I'm gonna give you guys an update, and if you guys didn't check out on my Instagram or on my Facebook live streams that I released 10 minutes ago, I'm gonna take my phone. I'm gonna go out to my tiny house office. I have a guest house office in the side there. I call it my tiny house, and I was renting on Airbnb, and it was bringing in $900 a month or $800 a month on average. But I've now decided to block it off and keep it vacant for when I have investors or guests come and stay. But more importantly, it's going to be a place for, hey, great, that's awesome, 100 subscribers, that's fantastic. I remember when I got my first 100 subscribers only a couple of months ago, actually. And that was really, really exciting. It feels really good when people are following you along the journey. That's awesome. Take you to the tiny house after we go through some Q&A. Can you guys hear me loud and clear? I probably should have, it just occurred to me, I don't have Harks Creative with me today. I don't have Kyle with me today, so I didn't hook up the lapel mic. So hopefully you guys can hear me. If you can't, let me know. I should have probably hooked this up earlier, but let's do it. Can you hear me? When I go outside, I don't know if the lapel mic will come with me because we're gonna have to go on the move, but we're gonna check out the office. See if it's any better with the lapel mic. Let's go in and test this out and see what the difference is with lapel mic. If you'd like it better without, hey Michael, how you doing? The regulars are popping on. Tommy, I see Zach in, Battelle, Financial Wolf, all the regulars popping on. Let's see if we can get this, see if it's any better with the lapel mic going here. Guess we'll find out. What do you guys want to talk about today? You want to hear what's been going on with me? Have I closed any more deals since last Wednesday? The answer is yes. Yes, I've bought more properties since last Wednesday. Every single week. Buying properties every single week. Tell them the biggest. Just because I can. Just for fun, because I enjoy the game. I love the game just too much. Asaf, how you doing? I'm going to give my thoughts on the real estate market. I'm going to talk a little bit about whatever you guys want to talk about, really. There are lots of different methods to invest in real estate. Zale, call me. Yeah, there are a ton of different strategies and ways you can invest in real estate. Is that better if I move the lighting kits? Okay, let's see. Is that any better? Can you guys hear me loud and clear with the lapel mic? Is it too loud, too quiet? Usually we adjust the sound on the lapel before I go live, but it's just me. It's just me tonight, guys. Hello? Can you hear me? What are we going to talk about? We've just wasted the last 3 minutes. I'm trying to buy time. Hey, Auto Mechanics LTE, how you doing? We're just waiting to... Asaf says, are you an investor? Yeah, I'm an investor. I'm a real estate investor. I've been investing in real estate since I was 19 years old, and it's been fantastic for me. I unlocked financial independence, and now I don't ever need to work, but I do it because I love it. I'm out there hunting because I love it. I'm, reading these books here, fundamentals of real estate, to have my license eventually get brokerage going. Just because I can, not because I need to work. A lot of agents are selling houses and need the commission to live. They have to hunt and kill in order to feed their families. But for me, I got the passive income coming in, so it's not a huge deal. Hey, Nicholas, how you doing? Great to see you on. Yeah, we got some people popping in. I'm sorry I'm a few minutes late. Most people are used to me starting probably the last few weeks. I've been starting around 7:10 or so, but now I'm gonna try to start right at 6:55 today. It's really more about at this point giving back. Like a lot of what I do is give back, and people, this whole idea, this investing. Hey, Green Sequoia, how you doing? Good to see you on. This whole idea of, hopefully people can still hear me. Make sure my lapel mic is good. I'm gonna adjust it a little bit. Is that better? I can go back to the camera mic. Yeah, about 4 or 5 minutes ago. Looks like everyone can hear me loud and clear. Got the lapel mic running. We are on. I realized I didn't have it on when I started this video because usually I have someone here to the side helping me out, but today we don't. If you guys stay on, hey Ellie, how you doing? Welcome on. Welcome to the stream. Put any questions you have about real estate investing, financial independence. I'm going to talk about my thoughts on the real estate market. I'm going to talk about what's been up in my life. If you guys want to know, this is more of a vlog style of us sharing, and really the reason I do this every Wednesday is so you have that consistent update. And it's not just about, it's about helping you guys, but it's also about me documenting my journey and learning from that, right? A lot of times I'll share something, I'll go back and I'll watch a video and say, wow, it's interesting to see where my headspace was at that time, and what I was thinking, what I was feeling. And that's actually very insightful. I recommend you guys do journaling. Journaling is fantastic. Ain't no problem, Seth. Okay, Financial Wolf's got some questions. These are all good questions. I'm going to answer them all, I promise. I try to get through every single question until we get so big that, and by the way, guys, I do have all the criteria to be monetized, so I'm in the queue the last week or so for YouTube to review everything. Hey, Angie, how you doing? If you're on here, let me know. All the regulars, I see these names. I know you guys. It's great. I like to see the same faces each and every week. They're like you guys are my loyal supporters, and I love that. So I'm going to give you guys updates what I've been up to in the last week or so, but how I got started in this, and I didn't talk about this very much, but I had a few friends kind of poke me, and people have been reaching out to me and saying, hey, Mike, I would love to invest in real estate. I'm not prepared to do that myself. I would love if you join me, right? If you would kind of, partner with me. And I was like, well, I need to get set up a company, and we need a property management company, and eventually a construction company, and all of these, pieces that need to come together to build this. And as it turns out, people just, word of mouth, right, will spread that I can get people's money back and double it in like a year, right? And where can you get 100% return on investment? Nowhere. I can actually, with real estate, with 100% guarantee, assuming the market is at least flat, I can outperform Berkshire Hathaway and Warren Buffett because I have leverage. He doesn't have leverage the way I do. I can borrow at 2.9%, and I can borrow 5 to 1. So every $100,000 I invest buys me $500,000 in asset base because 80% of it is mortgage, right? So we're talking about the power of leverage. That is what makes real estate so attractive at the end of the day, right? And look at all the regulars popping on. I love the questions here. I'm gonna get to all of them, I promise. Very fantastic that you guys are all shooting questions on there. Let's talk about, what was I saying about where I got this idea to come from. And my partner actually owns 50% with me. He's kind of staying out of the camera, but he's not even here today. But he came and we did a few joint ventures together. He came from Vancouver, and we did a few joint ventures together, and he made a ton of money on those 4 or 5 projects that we invested in. Well over $250,000 was made. And he's like, wow, Mike, like if you could do this on a bigger scale, there's so many people who have capital, who are hungry and want to build and grow their capital. We should be doing this. And so me and him partnered on the property management company and on the investment side. And people have just been like, now I have a lineup of people who have been reaching out through YouTube and through my social media and just through my network, really, that have been saying, hey, Mike, I would love to joint venture on a project with you. And so that's where the investors are coming from. And I'm just controlling the deal, the management, the renovation, everything. They do nothing. They're like the silent partner that provides the financing. I do kind of everything else. And I take a cut of any profits. I don't take any of the deal. I don't own any of the deal. If it's a flat market, I make nothing. But if there's upside, then I also share in that bonus. So that's sort of the way we've structured our agreements. And I want to do a video for you guys on the 11 deals now, because I haven't shared that. But we've got 11 properties I bought in the last 9 weeks. And I'm buying one every single week. Last week, you guys remember I had 8 properties and I had offered on 2. The one that I thought we'd got, it fell through. So that was kind of sucky. So we were back down to 8. And then the other one, I finally got it buttoned up. We're at 9. And then I bought 2 more since then. Bought a condo near Fanshawe and another property there. A condo downtown, actually. We're gonna expand into the Airbnb market in a big way, I think. I have some really cool ideas to build a really awesome company where we can Airbnb other people's properties, our own properties, and get probably 3 times market rent with Airbnb if you're in the right locations and the right properties. So that's something that that's something that's really key. To answer, I just saw one of the questions pop up about flipping. Sort of like I don't actually flip. I only ever buy and hold. If we end up selling, I have an exit strategy on every property that I buy. It has to have an exit strategy, but I don't intend to sell any properties. So I like to buy them and then refinance them and then have all of the equity that's in the property be created equity. So we get all of our money back out of the property. We own property with no capital of our own, and then we just split the profits. We have solid cash flow. Usually a property on average generates $1,000 a month. Our best of the 11 deals generates $2,500 a month from one property. $458,000 purchase price. So, you know, like if you had 4 of those properties at $458,000 a piece, and you mortgage it up, you spent $400,000 in down payment, and the rest was mortgages. You'd be at $10,000 a month in just cash flow, just rental income. That's pretty lucrative, pretty attractive, right? When I tell that to someone who's looking to get out of their day job, right? And maybe they got a few $100,000 saved, and they have, you know, great credit, and they have a solid job, they can get a mortgage. That's something that's really attractive. A lot of people don't realize they can use the value of leverage, right? And the value that they have a good job and steady income. Hey, how you doing? Right on, Kyle. No problem at all. We actually had some technical difficulties. I was missing you when I was getting set up, actually. I didn't have the lapel mic hooked up, so I miss you. But it's okay. We're carrying on. And so we're talking now about some of the things in the market and how I got started and all this. But let me know if the sound is not good, because I'm doing my own stuff here today. But you know, what does the real estate market look like in London? I'm going to share some stuff on that, what I've been up to. You guys know 11 deals. I'm going to do a series of probably 2 videos because it's too much to talk about in one whole video. But I'm going to talk about the deals we're buying, like the properties I just bought, and like starting in July, the 11 deals. Some are, you know, we've got some private Kijiji deals. We've got some wholesale. I paid a wholesale fee and bought a deal off that way as well. Some have just been MLS, great negotiating on the behalf of the agents, and just finding properties that on one occasion there was all offers considered by a certain point, and we went $1 over asking because it was way under listed. And they were expecting multiples to get 50,000 over asking because they had priced it so low, like way below market value. And they were forced to take our offer because we're the only ones that came in, and we kind of pressured them into taking that offer, no conditions and that sort of thing. So I'm excited to share those deals. People have been asking me for a while to share some of my deals, and I've shared a couple of videos on deals we've done before on my YouTube channel, like the one that has been really attractive, that one deal that is $2,500 a month in profit. It's probably one of my better deals. We bought it for $205, sold it for $435 in an 8-month period. Not by design. We weren't trying to flip it. It just, things changed, and we decided to cash out that property. We rebalanced our portfolio. A lot of people don't think you should rebalance real estate, but you definitely should rebalance your portfolio. If the market value of a property is selling at a 6 cap rate, you can sell that and then buy 2 at 12 cap rate. You should do that. Like, buy and hold real estate forever makes no sense. I will never say that I'll buy and hold forever. My strategy is to hold in cash flow. So I don't rely on appreciation. I don't ever rely on, you can. There are guys who, hey Tagger, how you doing? Yeah, like and share. Throw it on social media if you're finding some value from this. If there's someone who can benefit from hearing my financial advice about real estate or personal finance or whatever we could talk about today, share this with them. You know, they get some value from it. That'd be awesome. But you know, talking about strategies in real estate, and we know there's the 3 ways to really make money in real estate, and the middle way is the kind of, there's 2 ways, right? So I say it every single time. I'm going to keep saying it. You can be a Johnny cash flower who's making their money on rental income. That's what you should be doing first off. Then you can be an anti-arbitrager. So you're arbitraging, which means you're buying assets below the value that they're worth. And either you've bought them really low or you find a way to add value to the property. So you renovate it, you put better tenants in it, you do anything like related to anything to add value to the property. Sometimes that's as simple as some cosmetic. Like I had one property that I sold that someone went and took really professional photos of and relisted. I did it the whole renovation. It was beautiful, but I didn't market it very well. And I sold it at a bad time of the year. If you look seasonally at the data, and we're not supposed to share this stuff because it's supposed to be like contain the data, right? In Canada, they don't like to share the data on the real estate market. But if you look seasonally here in London, for instance, property values tend to be 14%, like 10 to 15% lower. We had a beer once. This is true, we did. You're an investor actually technically now once this closes. So you're part of the investor network. But if you talk about like the real estate market, if you look at the actual data of average sale price in London of the houses, in December it tends to be the lowest. December, like towards the start of January, anywhere between late November and 1st of January, then things pick up again. But every single year, if you look, even we've had like 20% growth here, it looks like this month by month. And so, and the bottoms are like the bottom of like a year and a half ago, or the bottom of even like this year will probably be lower than the bottoms of a spring sale. So just always sell in the spring in my market. Definitely avoid like late November to early January. No one wants to buy. Everyone's doing Christmas stuff. That's when you can really get a deal. It's when you can really negotiate. So interestingly enough, I don't know where this tangent was going, but talking about arbitraging, right? And so there's seasonal arbitrage that we definitely take advantage of. I'm buying deals all the time. So, I mean, I'm gonna get better deals probably in December, but with private deals, sometimes you get away from the seasonal stuff because you're dealing with private people and you can sort of negotiate. and get those December deals in July. They're harder to find. I'm having a harder time finding deals now. I work a lot harder now to find the deals than I will have to in November, December. I'll be able to just throw out a bunch of offers and there'll be no one else competing against me. So lower competition is fantastic overall. Also, supply tends to be lower that time of year, but demand is significantly lower that time of year. So you do have a great bit of arbitrage there. So arbitraging, got to be cash flowing on your properties, got to be arbitraging. And the third thing I definitely recommend is to look for speculation. So when I don't rely on it. Do not buy for speculation. Bank on no speculation. But look, if you can find a gentrifying neighborhood or an area you think that has good long-term prospects, that's a speculative play. You're getting into gambling, and I don't like to pay for earnings that don't exist. Like I won't buy properties, or I won't buy into companies, for instance, on the stock market that are trading with high PE ratios, right? Price to earnings. I want my price to earnings ratio to be a bit lower because I want to buy solid like utilities companies that's cash flow now. You're buying into a company with no cash flow with a future that'll be cash flow, like Tesla was a stock that was at one point trading at an insane PE ratio multiple because everyone was believing and betting on the fact that they're going to succeed, but they might not. They weren't producing at one time. They weren't producing anything at all. Sorry, a couple texts just came on, read those texts. Berkshire Hathaway. I'll tell you what, we're going to buy a property for you, Kyle. Berkshire is great. I mean, I'm a big fan of Warren Buffett. He's a really smart guy. But I can tell you with guaranteed certainty that you can invest in equities and get the kind of returns consistently year over year with the same profile of risk, the same level of risk as you can with real estate because of leverage 5-to-1. You can't go buy equities at 3% cost of debt. You can't go borrow at 3% and go buy publicly traded companies. And you can't do it. Can't do it 5-to-1. You can do it 2-to-1. You can do it 3-to-1. You can do it with options trading, but then again, you're taking a lot of risk, right? With real estate, you've got a stable asset that tends to be relatively flat and it cash flows, so it self-services. If you're buying companies that were, like my real estate properties are producing 25-30% just cash on cash down payment, right? So if a stock's paying a 30% dividend and has the opportunity to double, and you control that, like you're literally on, like with real estate, I'm on the board as if I control everything with this property. I control how it gets renovated. I control the cost. I am management. So I'm betting in myself, in my own vision. When you're investing in public equities, you're investing in someone else's vision. You're investing in someone else in management, meeting their guidelines, and management delivering on what they said they were going to do. And so that's been my issue. And that's why you guys remember at 18, I was trading stocks. And at 19, I was trading stocks. And I bought my first property at 19 because I realized I could go to the bank and get a mortgage. And this was a long shot, but I got a mortgage on a property at like 3.2%, which back then, like everything was like 4%. So that was pretty good. I was pretty happy with that. And they took a risk on me. And I used leverage to then, so my down payment, right, is like $30,000, $40,000 on a property. If it appreciates 5%, 8%, right, we're talking like 2% a year, then your appreciation is on the total asset. So the property appreciates $40,000 in value. You've only put $40,000 in your own capital. You just doubled your down payment, right? And then if you're cash flowing $1,000 a month, you get your whole down payment back in 40 months, right? So if you have all of your money you put into the property, your whole 20% down payment back in 40 months, who cares about appreciation at that point? Like people ask me like, what happens if the market goes flat? And like London, I think the fundamentals are fairly good. Toronto, I don't believe. Vancouver, I don't believe in the fundamentals. But in London, the fundamentals make sense. Like the price to rent ratios are a really good indicator. Some of our economic indicators, we have really good income to rent ratios here, like people's average income to the price of the rents, house price to the rents. There's several factors you can look at. Immigration statistics. Again, London's got some fantastic immigration statistics. So there's some things I think that diversity in the town, I think we're going to be okay in a recession. Like even if Toronto dropped 10%, I think we would be relatively flat. We might take a small contraction, I think, on the price, but again, you just hold, right? Like in 2008 when equities were crashing, if you didn't sell and you were diversified, you had a huge portfolio of diversified stocks, you just held till 2011 and everything was recovered back to where it was before. You just hold, right? And it hurts to hold if you're not having like consistent cash flow. But when I'm holding and I'm making $1,000 of property in cash flow, I mean, it's going to be okay. And in times of recession, less people can afford to rent, more people rent. So typically rents tend to be strong and stable throughout most recessions. Canada would have to be really screwed for us to have, like, that's basically the only scenario. And if Canada's screwed, like I'm talking people are raiding in the streets where things are, like it's going to be so bad that this is the least of our problems. So I just don't think it's going to happen. I think the government would step in we're a fairly socialist nation. So you got me down a rant about a little bit of everything. But coming back to what I've been up to, you guys know I've been killing deals. I'm excited to share some of those deals as we get them rented out and deliver on our like I've set out when I give a profile of the property to the investor. I say here's what we're going to be able to rent it for. Here's the plan for renovation. Here's what we're going to do to it, and here's the exit strategy, etc. I talk about the options. I want to now deliver on that. I've already done it for myself, and my friends 25 times now. So I want to do it another 10 times and get well into the 30 deal range. I'd like to have done 100. I'd like to have personally bought 100 properties through joint venture, through all that kind of stuff. So that's my little goal right now, and it's kind of interesting because if you guys have been into real estate transaction before and you're anything like me, what you'll notice is that there's this I love the hunt. I feel like I'm a lion in the weeds, and I just get a gazelle or whatever I get, and I hunt. I get that hunt, that prize. And for a while, there's a huge high when you land the deal, and then you close on it, and there's another huge high, and then it peters off, and then you get it renovated, and there's you do the design, and that's a really huge high, and then tenants move in, and then after that, it's just I go back to baseline, and it's boring, and I need another deal. I need another exciting way up, and then again down. So yeah, I need to be, and that's a good idea. I just saw something pop up there about documenting. We can document yours when it closes end of August, and we get the renovations underway. And it's a cute little condo. I think it'll do really well, have some good upside. I'm excited for it. So, yeah, what are we talking about here? That's a 5-bed Fanshawe rental property. That's pretty exciting. What have I been up to? You guys know I've been up to, I got to hell these questions, I guess. And then stay on. The 23 people who are on right now, we're going to go out to my tiny house after and get to do a little look in the tiny house, which I'm converting to my office, which will be cool. We'll have 2 desks. My partner and I will be in there. We're making calls, killing deals, get our scrum board up. Going to be really excited to have that going and dedicate that space to the business and to all of that. And if we have people come over, we've got the loft, double bed up in the loft. We can have people stay over too. And the couch pulls out in there too. So yeah, I can have little parties in there. If we got some employees going, we need to house them for a bit or something. I don't know. We have options. Okay, so we're going to hit some questions. Let's do it. Going way up to the top of the questions to hit all the questions. The regulars are on, and I see some familiar faces, and I'm stalling time while I'm trying to find out my place. Okay, there it is. How many property managers do you have? Me and my partner. That's it. We own the company 50-50, and we are managing everything right now. That said, we are moving towards a model where we're integrating with, we're looking to hire some virtual assistants from Indonesia, some overseas effectively, who work for $4 an hour, not per hour, but per task. So you give them task work. We're going to set up standard operating procedures where they're going to handle all of our advertising, posting ads, responding to tenant requests. We give them a standard operating SOP, standard operating procedure, where if this happens, then call this plumber. If this plumber doesn't answer, there's a backup guy. And so I'll have a list of all of our trades and all of our guys that we can call. And so ideally there'll be a workflow chart that I can give them for if this happens, then this. So I got to build all that. And that's part of our systems, right? Right now I have that up here. I have it sort of scribbled down for my partner he's now at my level, but I had to train him because he was my first joint venture. And I kind of coached him and brought him into the world of real estate. He didn't know much about it. And now he's an expert. Last year and a half, he lived with me for a year, and we had an intense training program. I brought him to all the rent. I taught him to drywall. We were painting. We boarded a whole basement just because I wanted him to feel the pain of lifting a 4x8 sheet of drywall and having to screw it off. Learning how to lay floor. I taught him how to lay vinyl plank floor. All the stuff that I had to do. He isn't proficient the way I am at that stuff, but at least gives him an idea so he can see and get a flavor and get a taste for what it's like. And I think you need to do that to be a good manager. But anyways, talking about systems and talking about property managers, we're looking to hire someone very soon. When we get to 25 deals, I'm hiring someone full-time. We do have crews of, I have contractors who are independent contractors who do all my maintenance. So if I have an issue, I'll escalate a maintenance issue where they'll go on site and deal with that issue for me. So I do have guys in place for that. And we're looking to hire actually a third person to handle maintenance and just guys we can call to handle renovation work, unit turnover. If a tenant leaves, you need to paint, you need to change the floors out. Just having guys there to do that. You go through the guys who do this, you go through them all the time. It's hard to keep guys for long. You'll have 1 or 2 that'll be your steadies. And you have a ton of subs that you'll just float through. Guys move on, they get new jobs. Things happen. It's just the nature of this industry, and you got to be good at finding guys quickly to replace them, and you just have them do things by the job. And usually the first or second time they work for me, on the job rate, I would start with the job rate. You can see the quality of their work. Like I can tell usually pretty quick whether someone's good or not. And depending how desperately I need them, someone who's not good would not be part of the team. But if you need people to get things done, sometimes you just need, I have general laborers who will work for, I probably shouldn't say this out loud, but there are, hypothetically, there are guys out there who work for $12 an hour cash, and they'll do painting, they'll haul out debris, that kind of stuff, right? Yeah, so I definitely think that, that you have to set up systems. And so to answer your question, how many property managers do I have? My partner and myself, so 2, and my wife kind of helps out a little bit. So we're a 2.5 person team on the property management side, but we're getting those virtual assistants going. So our team's going to be like 7, I think, with that. And then the contracting side, we've got anywhere between 3 and 10 guys working subs and stuff like that, getting the renovations done. We will need to scale up because as I start closing more and more deals, a deal a week is a lot of work. We're acquiring 1 property a week. And so we get to 100 properties. 100 properties, an average purchase price of $250,000 or $300,000, which is the average price in London. That's 25 million, $30 million in holdings. So that's a decent sized portfolio of real estate. At that time, we have a bit of economies of scale, and so it'll get even easier to grow. From 100 to 1,000 shouldn't be too bad once we get the brand out there and people start seeing that we can actually deliver on what we say we can do. So anyway, that kind of gives you guys the feel of what's up. I just have fun. Like building businesses is fun. It's a lot of work. Like don't get me wrong, there's a ton of stress I go through too, but the deal hunt, I love the deal hunt. Can't help myself. Have to be involved. I thought I could be retired, tried it, can't do it. Maybe sometime in the future. Ideally, I'll build systems so that everything runs smoothly and I can watch as all the wheels and the cogs turn. That's the ideal scenario. And I can lean in when I want to pick up deals and stuff like that, but have things kind of moving on their own, sort of smoothly like that. Okay, Zale Comedy, I missed your question there. Is there another method that isn't the BRRRR method to invest in real estate? Yeah, there are tons of strategies to invest in real estate. There are people who do the flip, so they buy single family homes and they carry the cost of that home being vacant. They pay all the utilities, the property taxes, the mortgage, like the financing, however they've got this property to be financed if there's interest costs. Sometimes they borrow hard money at 10, 12, 15%. And for a 6-month period, that's fine because you're flipping the property, you just build that into your margins. So there's the flipping business, which is effectively, you're buying properties, your whole goal is to renovate them as nice as you can for as little as you can and then have a margin for yourself when you sell the property. There's another strategy, which is the BRRRR, which is doing basically the same similar model where you buy a property, like the BRRRR, right, is buy, renovate, rent out, refinance, and then repeat the strategy. So the refinance buys enough to buy the second house for you. Flipping does the exact same thing. If you had 2 flips going, you make enough profit to buy 3, right? So it's typically you can build a system that, like with real estate and leverage, it ends up being such that you grow really quick. Like it's a exponential type of growth, right? Things just grow really quickly. And then of course there's like the buy and hold strategy where people just buy and they hold for cash flow. I recommend buying everything, like the flips. If I do a flip, it's going to be a flip on a multifamily, so on a duplex, triplex. So I have 2 units rented and I do 1 unit, make it really nice, get new tenants in, then do the next unit, then the next unit. So I have 0 holding costs. Like if you're flipping single family houses, you have holding costs, you have, if it takes longer to sell, you're stuck 6 months holding it and your profit goes way, way down because you're borrowing at high interest rates. When you're doing buy and hold, good solid cash flow properties, you can borrow really cheaply. And just, it provides a nice exit strategy with the BRRRR. So there's the BRRRR, there's the flip of the multifamily. There's, people are speculating. They're buying pre-build condos, pre-build houses. I see a lot of that happening. There's the whole development play in real estate. So you can buy land, wait for it to appreciate. You can develop that land, so you sever it off into multiple lots, sell those service lots off to people, make a huge profit. You have to have really deep pockets and be really patient to handle development and have really good connections because a lot of it's in city approvals and knowing the right people to get financing and knowing the right people to buy those lots from you. There's a development play where you buy the lot and then you build the house. And so you, as the builder, you make money in real estate. There's so many avenues to make money in real estate. You could be a real estate agent and just sell real estate and make money. You could be on the mortgage side and be handling mortgages and make money. What other strategies are there in real estate investing? You can invest in farmland. I see a lot of people investing in farmland. It has a terrible return, but if you're investing in cash, I don't know, I guess it's a safe investment at least, and there's some upside appreciation. But mostly what I hear is that, and what I've seen looking at farmland is that if it's not appreciating, the cash flow is very, very bad. After property taxes and expenses, if you hire a farmer to farm the land, you don't really get too much cash flow. Hey, Mr. Beefy, how you doing? I'll read your question in a sec. It's a long one, so I'll read that in a second. I promise an answer before we get out to the tiny house. Maybe at your question, that's when we'll go out to the tiny house. Deal? If I make it to your question, Mr. Beefy, that's when we go out to the tiny house. And you guys get to see the office pre-renovation. I have 2 custom desks going in. This desk here actually is going to be one of the desks, and then I'm building a live slab. I have a live slab wood edge. I'm going to be putting an 8-foot countertop over top of the fridge. I'm going to set up a really cool office space there. It's going to be really awesome. And we're going to mount, I think, the TV on the wall. It'll be really cool. So I'm excited for that. All right, what else has been going on in the world of what I was talking about there? I lost my train of thought. Talking about real estate investing. There's commercial real estate investing. So you buy retail space, you rent it out to a retailer. There's just so many different ways you can invest in real estate. There's residential stuff, right? There's like multifamily. Then there's like apartment building type multifamily, which is more of a commercial side. There's retail. There's industrial. So you can buy a property and then rent out. Buy a property and then rent out to a factory to rent out to a company who needs to do manufacturing work. There's so many plays in real estate and so many ways to make money in real estate. I like residential because it's cheap debt, it's easy to get into. I just know how to do it really, really well. I know my market well. And so I have a competitive advantage in my market. I'm better than most people in my market, and I'm milking that competitive edge. So once you put in 10,000 hours and you found that thing you're really good at, I think you should exploit that. Of course, always open and branch out. Like I'm taking on Airbnb now as a new business model that we're incorporating in our property management for other people and for our investors, where we can go and take a property that, a bachelor downtown rents for $800 a month in London, but on Airbnb, it'll make $3,000 a month, right? And all we have to do is just get some cleaners in there, furnish it. So I'll furnish the property for the owner. I'll pay for all that capital up front, and I'll get it back over time through taking a percentage of the revenue coming in. So yeah, there are so many ways to make money in real estate. You can, even without even buying property, you can go rent a property right now and then Airbnb the rooms out, or rent the rooms out individually and make money. I know people that do that. They rent out places. I know a guy who rented like 10 places in Toronto, and they rent out, they sublet the places again. So they rented it for $900. They locked in a rent control, and they subletted it for like $1,500 to someone else. They're making $600 a month, and they have the lease locked in. There are rent controls. They can't raise the rent, and they're making $600 a month, and they don't even own the property. They just went and signed a lease. So you go out there and rent some places and re-rent them. If you're ambitious hustler, you're out there, you can get them rented. You take the risk, because if they don't pay the rent, then you got to pay it. But if you put good tenants in there, you screen them well, or you use Airbnb, you can actually make double, triple the rent that you're paying and make a huge margin with no capital at all. You just go and rent some places and re-rent them out. Or go call a landlord up and offer that service, right? It's so easy to make money in real estate just by, when I was 18, I wish I would have done that. I wish I would have went on Kijiji and Craigslist and got on there and all those looking for tenants ads and offered to rent their place and give them the proposition, say, I'll rent this place from you and I'm gonna Airbnb it. Or I'm gonna rent it out to these people. I'll guarantee the rent. I'll give you first and last. Maybe that would be what you need to invest. And then you go and before you give them last anyway to lock the lease up, and then you go find someone else and you show the place, and then they basically move in and you make the margin. You put it on Airbnb and you make the margin. So lots of ways to invest in real estate. You don't even have to own real estate to invest in real estate. Yeah, I've seen people flip papers, wholesaling, of course, too. There's a million ways. I could just talk forever about the different ways there are to make money in real estate. But let's hit another question up. Because I want to get to Mr. BP's question so I can take you guys out to my office, tiny house, guest house, and show you guys what's going on there. Because I'm excited about that. Okay, next question. What are we saying? 27 people on. Nice. Real estate is Wall Street? Sorry, I don't know good English. Asaf, no, real estate is buying and owning land or buildings, properties in the country. So Wall Street is the term for, typically Wall Street is like in New York, it's like the place where all of the iBankers tend to work. In Toronto, we call it Bay Street. It's like the area where all of the financial district exists, where all the people, the iBankers work and trade. And yeah. Anyway, so that's that. Next question. Angelo question as well. I'm excited to hear what your question is. Okay, so Michael Chung. Michael, how you doing? 29 people on. Hey, we're rocking it. Michael Chung says, what do you think of buying a car you desire from an insurance auction and then fixing it up? I think it can be cheaper than buying it secondhand, but estimated repair costs can be high too. I actually know someone who does I know a couple people who do this, who buy cars and they fix them up. Max, if you're watching, you should comment and share your insight on that. We should do a video at some point. If you come back to Canada, we should do a video on, because he's flipped like 100 cars, I think, or more at this point. So he's an expert in this. I actually did this myself. When I was 16 years old, 17 years old, bought my first car. It was a stick shift. I love a standard car, prefer it over automatic. Yeah, then after that, I bought a van for my business that I started. I bought a Mitsubishi Spider Eclipse, a convertible, with bucket seats and short shifter. And it had no steering rack, so like no power steering, nothing. I had to do a little fix up on that. I flipped it, and I actually traded someone for a hot tub and some baseball cards that I had. I bought the hot tub for $200 off someone, and I traded the hot tub and the baseball cards for a car. Actually, the next one was a Mitsubishi Eclipse. And it was kind of decked out and lowered and cool rims and stuff. But I actually saw this show. It was called like Barter Kings or something like that. And I used to watch it, and I remember it just come out. And I was like the first time it was released, I remember it was being previewed, and I thought I could do that. Like the idea of the show was you could start with like $100. You go spend $100 and you buy some item out of an antique shop, like a really cool bike helmet. And at the end of the show, you trade it out for like a boat or a car or a house. And people just trade small incremental trades. They'd go out there and they trade like this bike helmet for like a scooter. And like the scooter might need a little tune-up, and they sell this, like they trade the scooter $400 value for like a hot tub that's worth like $900 value. And they trade that to someone for like a small pickup truck, and then they fix that up, and they trade that to someone for like a jet ski, and they trade that to someone. And you're just finding people who want to trade stuff. And there's tons of barter in the market. And I was actually, before I really had any real capital, I had a couple grand saved up from I used to work at Tim Hortons for 2 years, and I saved all my tips and all my earnings from that. And that's how I got started. And I was actually kind of flipping cars, really. So my thoughts on it are, it's like flipping real estate, but way smaller margins, and you take a bit of a risk. I had one car that the engine kind of blew on it, one of the gaskets, and I broke even, but I didn't make any money, so all my time was wasted and a bit of gas to drive it back from where I bought it from out in a farm, an hour out of town. So I started doing that, and like Max, and if you're watching, let me know in the comments later on. I know you'd like to watch the replays, so let me know if you do end up watching this, because I see myself in you a little bit in a lot of ways. So, and I appreciate the Instagram shout out, by the way. I did share that on my own Instagram story. But yeah, so flipping cars, you can start flipping cars before you're 18, because you can't own real estate. But you can own a vehicle at 16, 17, and you can't really get a mortgage right away until you got some proof of income. So when I was 17, 18, I didn't have great income. Banks still wouldn't have lent to me at that time. At 19, it was like the earliest I probably. And I had to line everything up. I had to build a credit score. There was like a year of prep from when I turned 18 to when I was 19 to buy my first property. In that time, definitely recommend flipping cars. Is fantastic. I wasn't really that handy. Like I can do an oil change, but I'm not that handy with cars. I would just find someone to repair things relatively cheap. Most of the fixes I would do would be like little things, like fixing like a little bit of rust and just spray painting and like just cleaning. Like so many people just have dirty cars and you just clean them. Most of what I did was not repairing the car, and I wasn't that handy. I'd find deals. You go out and look for deals, and there's deals everywhere, and everything, there's arbitrage. You just have to deliver value in some way for that person. So yeah, people sometimes give away cars for $300 because they won't start. And the car just needs a new battery for $90, and it starts, and it's like a $3,000 car. And they just thought the car wouldn't start. Car won't start. So you go there, you tow it away. They think it's going to the junkyard or something. You just put a new battery in it, it's good to go. So sometimes you can find really cool arbitrage opportunities. What I learned there was replicatable in that with housing. My first property at 19, my second property at 22, 21. So there's quite a bit of a gap there, but yeah, I mean, a lot of what I learned there, those skills were transferable, and I recommend you guys get out there and hustle and just do something, because all those skills tend to be transferable to whatever you want to do end game. It definitely does help you, and it's definitely valuable in that sense. So yeah, I mean, you guys probably didn't know that, but yeah, flipping cars can be really cool. Going to auction can be really cool. You take a big risk and you're competing, so just be careful you don't overpay. I always like the private market because I can go there and I'm the only buyer, and we're just having a conversation between me and the person, and you find out what motivates the person. Sometimes it's not money. You go there with a wad of cash, two people go there with the same amount of cash, and one person pays more, because it's not always about money for people. Sometimes it's about like ease of just like maybe they want something else. Some guy wants a jet ski. Like, why are you selling the car? Oh, I want to get a jet ski. Well, I can go find a jet ski for $500 and give it to him. He would have spent $1,000 because he doesn't know how to look for a deal. Or maybe he wants a new iPhone, and I go find an iPhone for $200, and I say I have an iPhone and $200 cash, and he's like, hell, it's like $200 cash in my pocket and an iPhone. I was gonna buy an iPhone with this anyway, and test the iPhone out. It works great. Boom, I got a car. So just trading things all the time. I would love to trade something for real estate. I've never been able to pull that one off, but I hear of people who have done that, especially in areas where real estate's a lot lower priced. Here in London, like a $350,000 house, no one's gonna trade me a car for that. But maybe the vendor take back. I think I could probably trade like a Shelby Mustang, like type of vehicle or something, a really nice car. I could probably trade that as the down payment. If I could trade up to one of those, I should do that. It'd be a cool video series. If I went and got a car and started trading up these cars and then finished with this nice car, just starting with like $100 and just my skill to trade up for new cars. And then trade this car for a down payment on a house. I could probably negotiate that. Someone wanted a really nice car, give them the keys to the car, the ownership, and then have them, if they owned it in cash, give me the rest of the value of the house as a private loan. So a vendor take back scenario. That would be cool. I think people would enjoy me documenting that. Maybe someday I'll put that on the list of I have 150 videos that I want to make for you guys, and that's going to be 151. Put that on the list for you guys. But that was a random tangent. Hopefully there was some value there. Looks like 26 people are still tuned in, so someone thought there was value there. Hopefully, Michael, that was kind of answered your question a little bit. Just be careful of what you're buying. Yeah. Okay, where did I miss the questions here? Scrolling down. What do you think about buying? Secondhand. Yeah, repair costs, just gotta be careful. Sometimes you can buy a car and I've seen the other way too, where people buy vehicles and they need $2,000 in repair, and they'd be better off buying a turnkey vehicle. If they don't know how to repair the vehicle and they have to pay all this money to repair it, it's not necessarily worthwhile. Tommy says, can you give us a general overview of your joint venture partnerships? What returns are your partners getting after the portion of the cut, monthly cash flow and ROI in general? So I want to do a video on this because I could spend a whole hour talking about this. I'll do a 2-part series on we've done 11 properties now with the investors, and there's several different structures, but one is effectively a property management contract and a percentage of profit contract if there is a profit. So after our renovation and cost of the property, if there is a profit, we get a percentage of that, typically between 25 and 50. Call it like 30% on average for an average deal. If it's a really sweet deal, I'll take a higher percentage because I can, because there's enough gravy for the investor. So ideally I look for you getting your 100% of your money back within a year. So through a refinance, through a sale, even if you don't refinance it out, the equity exists. So the property's created your 20% down payment. So we want to have the asset be worth 20% more. So I want to buy 80 cents on the dollar at the very top, right, ideally. And then cash flow, of course, too. So cash flow, we're looking about 25% cash on cash. So on your cash, 20% down payment, we're looking for 25% return typically on that. So yeah, that's what we're kind of looking for on that side. There's other JV models where we do like 50-50, and I take all the risk with them, and I'm like right there with them. I don't go on title for pretty much any of these. Depends if we just are managing the property, if we're joint venturing on the property, depends on the structure we set up. There are a few different options, and we're kind of open to whatever right now. I'm just having fun with it. Like if I make a little bit less money, whatever. You guys know I'm already financially independent, so it's not really, I have passive income I'm good. So it's more just about doing what I love. So there you go, guys. Let's hit up some more questions. Let's see if Bengali is done and I get to Mr. Beefy's question so that we can go out in the tiny house. Okay. Like the video. Yeah, that's right. I saw that question there. Okay. What will be your advice on how a second-year college student can invest around $13,000? My goal is to get involved in real estate investing at some point in the near future. So Zach in Kentucky. There are a lot of ways. I think my last question hit a lot of them off. Like you could go rent a place and Airbnb it. You rent a place from a landlord and Airbnb it. You could wholesale because your deposit would be a couple grand to lock a deal up, have a contract agreement, purchase and sale, and you could wholesale that to someone if it's a good enough deal. 13 grand, depending on your area, could be enough to get a vendor take back scenario where the vendor provides the mortgage. If they own the property in cash, they can provide the rest of it. Like you gave them 13,000, the house is worth 100, that's 13% down. They provide you the other, effectively 87% as a mortgage. So that's one option there as well. it is tough to get, like there is a bit of a barrier to entry to get into real estate. If you want to get into like buying and selling a lot of properties, you need capital. And so the capital doesn't have to be your own. Although I think in the beginning it should be. I think you should have played with your own money first before you go and play with other people's money. I'm a big fan of that. Like I think you should prove that you can do it with your own capital before you go do it with someone else's capital. That's been my model. My first 10 deals were not even with a joint venture, nothing, just myself. I didn't want to partner with people because I was afraid that I would fail them, or I just wasn't comfortable. I wanted to prove that I could do it myself. And so I don't know if that was stupid. I think you probably joint venturing is not a bad idea. If you have 13 grand and you have a friend that has a good mortgage, or your parents or your uncle, you got an uncle who's got a good job, he can get a mortgage obviously, then maybe you and your uncle partner in a property nearby. Or you have a family member or a cousin or a good friend, and you just pool together and you joint venture on the project. Getting into a property, if it's the right property, is better than not getting into one at all. So yeah, I guess that's the way I was probably too greedy in my first 10 deals. Just did it myself because I didn't know anyone. I didn't want to partner with people I didn't know. And so that's just my thing. But if you know someone, that'd be great. If you have an uncle or family or someone who's willing to go with you on the deal, then your 13,000, you could put that up, and maybe they get a mortgage for the rest, or they have a line of credit for the difference, and you guarantee them that you'll do all the work and be the hustler and be the hungry one. And on your first deals, you can do that. Okay, where were we here? Okay, talking about, hey Mike, once you're financially independent, do you have an emergency fund that you're saving on for any medications you need, glasses, etc., as you don't have any benefits? Patel, not a bad question. You know what? I never really used my benefits. I used to have full benefit package, and like I don't even remember going to the dentist like once in 3 years. I brush my teeth like really well, so I don't have any real issues. I'm relatively healthy, and here in Canada, like prescriptions are free under 25. So my daughter gets free prescriptions here in Canada. So there's that, and yeah, we do have emergency funds. So like I have money sitting in a savings account that I keep for like emergencies to buy a property, and it earns like 2.8%. It's terrible, but 2.8% guaranteed in a savings account like with Tangerine or EQ Bank. And that's my emergency fund. So if I need to liquidate, like I don't even need to liquidate, it's already liquid. So I have cash that I can take from. But my cash flow is so strong that if I need to spend like $300 on glasses, like if you're bringing in $10,000 a month in passive income and you live on $2,500 normally, you have $7,500 that goes into savings. So then what I would say is like if I had a bad month, my savings rate would go from like 80% of my income down to like 50% as a worst case scenario. Because I'm budgeting so much, I'm budgeting so much room there's so much room from what I'm earning to what I'm currently spending, that if an emergency expense pops up, I'm okay. So those people that live paycheck to paycheck, when something comes up, they need an emergency fund. And I have an emergency fund for my rental properties. Like I keep 10,000 a property in an emergency fund, like liquid. And so if I need a roof or whatever, I have it, right? And so you have like 20 properties, you need 200 grand, sort of pretty liquid. As an emergency, worst case, if every property had something go, like a roof was destroyed in every single property, you have to be ready to spend $5 grand on every single roof, or $2 grand, or depends on the size of the house. But yeah, so that's my thoughts on emergency funds. I think they're kind of, if they're just sitting in a checking account, that's not smart. I keep a very small amount. I keep 6,000 in my checking account because it gives me free bank drafts, like my plan is free with the bank if I keep 6K in a checking account. So I do that. That would be, I guess, my emergency fund technically, because then I could just pay the $20 a month bank fee or $30 a month bank fee and use that cash. But I have money in savings accounts and stuff too, and in investments. So yeah, that's sort of my thoughts on the emergency fund. Hey Ellie, how you doing? Okay, past this question. I'm trying to get all the questions I skipped. Question is, I have a job making about 50. What is the question? That's great. $50,000 a year is fantastic. My first year out of school at 21, I was making 50 grand a year, then 55, then 60. When I was able to buy tons of real estate, like tons of properties, convincing the banks to lend to me. So it's all good. Just need 6 months work history. Okay, Nicholas Grenchi asked, what are your favorite online communities? Any go-to websites or forums? London on Fire. On Facebook, join us. I'm one of the founders. Myself, Matt McKeever, Dylan, and Kellen. We founded London on Fire. It's a community open to anyone, but we have monthly local meetups. Big fan of FIRE is financial independence, retiring early. And it's just like the on fire community. Just really big fan of that. We all support each other and talk about, it's not really about real estate, more about
like achieving financial independence. So real estate could be one way you do that, but it could just be learning how to save, building budgets, all that kind of stuff. It's really, really quintessential to success in, basically it's all about personal finance. So yeah, I recommend that. Bigger Pockets is a good community. I don't have a lot of time anymore. I used to lurk on like the Mr. Money Mustache forums, early retirement extreme forums, a little bit on the financial independence subreddit, but not much. Like I actually don't have time for that stuff anymore. I don't anymore. Like Bigger Pockets is great, but I just don't have time anymore to be reading. There was a time when I wasn't doing so many deals, when I would just be doing a lot of reading and learning. I still get the notifications, so I'll see an email, I'll see like a few articles come up or a podcast, and I'll watch the odd one here or there. Yeah, so my hair is really messy, so I literally just ran out of the tap because it was like Bush City. I need to get a haircut. My wife's watching this. She's probably not, but if she's watching this, I need her to cut my hair. Too frugal to go get a haircut. I just get one for free. We bought clippers for $30 and it works out to like 30 cents a cut until the clippers are garbage. So yeah, no, my hair's just wet. It's not gelled or anything. I have curly hair naturally, so as soon as I get it wet, if I don't like brush it really straight, my hair curls up. If my hair gets any longer, you'll see it'll start to curl even at the back. Like it'll start to roll up. It's a bit of an issue, but I'm dealing. Okay, let's keep going with the questions. I did that question. Yeah, Bigger Pockets. Tommy, definitely recommend that one, 100%. Werner asks, hey, Mr. Mike, can you talk about out-of-town real estate investing versus investing in the town you're in? I like investing in the town that I'm in. It's like investing in public equities versus your own company. Do you want other people to manage the property for you? Because if it's out of town, someone else is going to have to manage the property for you. And so it comes down to control. If you put in place good management, then it's okay to own property outside of town. But if you know your market really well, which like I do know my market so well, I don't know Toronto or Vancouver as well as I know London. Like when something's listed in London, I can walk through it in 5 minutes and know whether I want to buy it or not, right? Like I know the market well, and that takes 10,000 hours to get that expertise that I have now. I've seen like 1,000 properties here. I get to know the areas, and I get to know, I know what I can rent a property for. I know, I get to know things. And so I become an expert in that market. It's hard to become an expert in a market that is far away where you don't live, because you don't frequent it. You don't walk there. You don't get to know the people in the areas. You don't go look at properties every single day. And you have to act quick in real estate to get good deals. Like most of my deals happen, they're closed in 12 hours of me discovering that it's a good deal, right? You gotta be quick like a viper. And it's hard to be quick like a viper if you're not on the ground. And if something happens, a contractor like screws you over, I like to drive by my properties and I'll surprise my contractors and just open the door and go in and see what's up. So it's nice to be on site. If you're investing out of town, then you wanna have a guy like me on site looking for things for you, someone you can trust, someone you can rely on. That's my advice. If you're investing out of town versus in town, depends on your market too. Like some markets aren't great, so you have to go out of that market to find good deals. Fortunately, I'm very lucky that in London, the London market's great, so I don't have to go anywhere else to get good returns. I think we have the perfect balance here in London between appreciation and cash flow, upside and diversification as well. So those are my thoughts. Asaf, I'm doing real estate in London, Ontario, Canada is my main focus. I do have property an hour south of London, just on Lake Huron there. I have a cottage development. It's actually over an acre of land with a big house. We're severing it now into 4 individual lots and we're gonna have 4 massive, I call them cottages, but they're gonna be like 3,000 square foot mansions, little mini cottage mansions with beach access. So yeah, it's actually my first real development play. I had one lot that I was gonna build on that I went through some development with, but this is my first like severing a big acre of land and breaking it off into lots and running sewer and running like water lines and running gas and all that and hydro to the lots and then building. It's gonna be a really interesting experience. So looks like the municipality is in support and we've had some good meetings, so excited to see how that goes. But yeah. Okay, some guy says, hey Mike. Hey some guy, good to see you on. Thanks for always live streaming around this time. Works great for my schedule. Keep these videos coming. I'm gonna do it every single Wednesday for you guys. I wanted to ask you a question though, to ask the audience, the people who are here, my regulars. You're 24, 26 of you, 26 of my loyal 17, 20 subscribers. What do you think about also for growth, what do you think about a scheduling of videos? Should I be releasing videos more consistently? Like, I just kind of do them whenever I get time. I try to stick to 2 a week minimum. Sometimes I go for more. But I do Wise Wealth Wednesdays every single Wednesday. I like that. I thought we're doing a Mindset Monday, but I'd probably just stick to once a week for the live stuff, and then releasing a video maybe like Friday, Sunday, or I could release like Wednesday, Friday, Sunday, or I could release Wednesday, Saturday, I don't know, Tuesday. What release days are good? Some people do Monday, Wednesday, Friday, but then I have to compete against everyone else's videos, like Kevin's and Graham's, and there's so many other great YouTubers out there that release content Monday, Wednesday, Friday. I could do it too, and just maybe at a different time. What do you guys think? I'm now working with someone, Harks Creative. We're gonna start sitting down and we're investing in a really good camera, like the same camera that Graham Stephan has actually. So it'll be get like the cool blurry effect. We'll be super in focus. It'll be way better quality than what we've been doing so far. Yeah, that's right. We want to know because we're kind of curious. I'm so busy that we're trying to just stick to a cadence that's valuable for you guys. I have 150 video ideas I want to pump out, so I need to start releasing more often for everyone. So yeah, we'll kind of see about. We'll see what works with the audience. So let me know in the comments. If you're still watching this, 57 minutes in, let me know what kind of schedule you like. Do you want to see more videos, less videos? Is 2 enough a week? Is 3 enough a week? Do you want a video every day? I'll try, but probably not going to happen. Not if I'm building a property management and a real estate investing company. And still spending time with my daughter and my wife, because my daughter's number one to me. I need to make sure that I always put her first. Because at the end of the day, I'm doing a lot of this for her and for the legacy. So. Financial Wolf says, are you flipping now since you're doing one every week? I have 3, 4, 5 units under renovation right now. We're going to have more soon. Can't get enough guys. Just there's so much going on. You can never get enough sub trades. It's a beautiful, beautiful thing to have. Okay. Let's hit another question here. Nice. Seeing those comments there. Okay. I have a job making $50K. I have one property now I'm redoing and going to get a tenant in after I want to do a flip to get more cash. I have about 16,000K to invest. If it's 16,000K, K means thousand. So Angela, we need to have a chat. If you actually have 16,000K, so 16 million, we need to be having a chat. But I assume you just mean 16,000. Your income's good enough to get mortgages, no problem. You have a tenant going in, so you have cash flowing property. Once you get a few cash flowing properties, you have like a little portfolio that'll help with the lenders I find. You can go to multiple different lenders too, which is key. Okay, so yeah, those are sort of my thoughts. You could refinance the property and pull the money out. If you've created enough value, you can pull all that money out with a refinance on it. There are a few ways to refinance a property, but one is just get an appraisal and put another mortgage on it. Release the first mortgage, put another first mortgage on, and then get the difference between the two mortgages given to you. Tiger, thank you for that. Appreciate the comment. Also, could you elaborate on how someone in college just get started in real estate investing? Best way to find a good deal, best way to finance it. I have some videos on this. Check out the channel, do some scrolling. You'll see some of the videos I've done on this. I need to do more videos on this topic for like the 15 to 25-year-old, because I think they have a hard time getting financing at that age. Like the Gen Z, millennial, that age group has a tough time. And I'm sort of groundbreaking in that at 19, I was able to get a mortgage for like almost 200 grand. So yeah, check out some of my previous live stream videos, guys. I do one every single week. I hit on it like 1 or 2 weeks ago, maybe 3 weeks ago, some strategies that are really, really clutch and key to that. What we're going to start doing, I think, too, is setting up the camera over here or over here and watching, like filming these live streams sometimes. And there's going to be some golden nuggets that we can put together and put into like a quick video for people for like strategies on getting financing, how to find good deals, wholesaling, all that kind of stuff. So yeah, let's keep going here. We did this question. How difficult is it to convert a family R1 to a duplex or triplex R2, R3 in London? Tommy, so depends on the area of the city, if it's in a student area versus not. Depends on what the zoning has been previously. So I have areas I've been in properties where it's a triplex for like 30 years, but not properly converted. And I can get a building permit by going through zoning and saying, hey, in 1976, this was a triplex. I can prove that. There was, it was listed at that point in 1976 as a triplex on MLS, like by a realtor. And I can show that and prove that. Then they go back in the bylaw in 1976, there was zoning that allowed for duplex, triplex in that area, which is pretty much anywhere in London you could convert multifamily, and it was not a problem. So yeah, definitely like that's one angle you can grandfather and then say it was okay then, so you should allow it. The other way is just to actually get the zoning changed on your individual property, which is like a $7,000 application here in London and a lot of work. I can talk about that whole process in a video, but that's another video for another day. Yeah, I've converted in R2-2 zones and got minor variances to allow for duplexes conversions. I converted a single family to a triplex before. Haven't done a ton of it, but I've done a few, and it's a pain. Let me tell you guys, it's a pain. But when you get it done, it's like a $50,000 reward. Like if you can get the property rezoned to a triplex, for instance, legal, it's worth like $80,000 more than an illegal triplex. Something to think about if you're doing that. Asaf says, you really 19? No, I started at 19. I'm 25 right now. If I look 19, that's cool. I'll take that. If I shave clean for you guys, I probably look 19. I walk into open houses and stuff like that, and people say, oh, where are your parents? So, yeah. He's over 19 with had beer once. Yeah, that's right. I remember that comment coming up before. I'm 16 and I'm helping my dad with real estate. Fantastic. Believe it or not, guys, my dad used to do a little bit of real estate investing back in the day, and I didn't live with my dad. My parents were separated, and we didn't talk a whole bunch growing up, but I would see him a couple times a month, and he had a few properties. Hey, Lee, how you doing? Good to see you on. Hey, Carolyn, how you doing? My dad used to have a couple of properties in real estate, and he wasn't like a big real estate investor really back then. He kind of just broke even. I think he got up to 6 properties, and then he sold them off and broke it. He went through a divorce actually with his second wife, and I think he had to sell half them off, and I don't know, it wasn't a good, he didn't have the same strategies that I have. Like he didn't have the same knowledge. And back then there wasn't a huge community online where you could learn all this stuff. Now we have a huge advantage. Like, yeah, mortgages were easier to get back then than they are today, but there are some huge advantages we have today. And yes, prices were cheaper back then, but from a rent to price ratio, it's actually still pretty good in London, like comparable to what it was, because rents have doubled from what they were when he was doing it back in the late 90s. And my dad still does real estate investing. It's interesting because I've been having conversations with him and kind of coaching him, and he's been actually buying some properties now too, and not in London, but outside of the market where he lives. And so it's interesting. That's kind of, working with your parents is great. I wish my dad was a big real estate developer. It would have given me a huge edge. If my dad was me, then I'd be even further ahead than I am. But I'm a lot like my dad, I think, in a lot of ways. We're both like workaholics. We both, I don't know. Yeah, we have some commonalities. We both enjoy business and stocks and stuff. So he was one of the people who was a good mentor in my life. I grew up with a single mom, and she wasn't too big into business, but she's helped me be who I am today too. And I bounced around a lot I didn't live with either my mom or my dad for a few years, and grew up in a few different houses, kind of like foster scenarios. So you guys don't need to know my backstory. I don't want to talk about that, but I think growing up in a rough environment actually gives you a huge edge because you're hungry and you don't want to, you know what rock bottom feels like, and you don't want to get back there. And I think, 90% of people will just stay in the social class that they grew up in. But for me, I just needed to elevate and get out of that. And so it was a huge motivator and a huge advantage, I think, to start off with nothing, to start from nothing. So my thoughts, if you're coming from nothing and you're watching this video, you can do it because I did it. And I'm nothing special. I'm no one special. I'm just an average guy. I just worked really hard. You just got to work hard and keep working and improving and working faster and smarter and failing, but failing forward. And every time you fail fast. You cut the losses and you learn from your mistake and you move forward, right? Fail fast forward. It's something I've always, since I was 18, I was saying that, 17, I've been saying that to myself. Like if I had a bad exam, I failed, but or I failed my business when I was 19. One of my businesses failed, but I learned a lot. I cut the bleeding quick. I cut the corp right up and we sold the assets off and we cut the bleeding. You don't keep running it into the ground. You cut the losses and you learn. What did I learn from that? What am I going to do differently next time? And it's an expensive lesson, but you know what? Education is expensive. You're going to have to pay for good education. Like I was paying $28,000 a year in my last 2 years at the Richard Ivey School of Business, the best business school in Canada. And I paid that because I wanted to make the network connections to people. I wanted to be part of that. And in hindsight, I don't know if it was a good idea or not, but you got to pay for good education. And often you make a $25,000 mistake, you're not going to make that mistake again. I promise you that. And so that's why I say getting involved in real estate investing or whatever you're doing, just getting in there and doing that, right? Your second deal will always be better than your first, no matter what. That's a fact. No matter how much you study, your second deal will always be better than your first. So you just got to do your first so you can have better, like you ask, how can you become an expert and a pro? Well, you got to just do your first deal because your second's going to be better than your first. And your third's probably going to be better than your first and your second. So that's just the nature of of getting the 10,000 hours of experience and building mastery up. So hope that was valuable. Hope that tangent wasn't too off the scale there. Okay, does the bank not like private deals? Ramsey, so good to see you on, by the way. Great to see you in the comments. The bank doesn't mind private deals. You know what, like, I like when deals are private because the data isn't, like, the realtors can't look up what I paid for a property because it's private. But there are also ways to register a property where it can't be seen how much it was paid for. There are ways to register all properties, so that happens. People change hands for, like, properties change hands for $1 sometimes. You'll see that. And that's because there's a different way that you can transfer the value so no one can see what you're buying and selling properties for. But anyway, that's another tangent for another day. Right now we're talking about private deals and how so basically you just get an appraisal on the property, right? And the private deals are just the same as public deals. I haven't had any issues getting private deals financed. Public deals it's nice when you have that MLS listing, you can bring it to your financer, but most financiers are okay if you get a private deal. It's one of those things where, that's a great question I just saw pop up. I can't wait to address that question because that's a dichotomy that I wrestle with on the daily, man. What are we talking about here? I lost my train of thought. Oh, private deals and financing them. You know what? I haven't had a lot of issues. If you're buying private deals way under market value and an appraisal comes in, you don't tell the appraiser what you bought it for. You just say, what do you think the value is? Here are the comps. And the appraiser can't even see what you bought it for because it's a private deal. They can't even look it up. And they have no way to find out. And I don't tell the appraiser. I just say no. Like, what do you think it's worth? I don't need to disclose what I bought it for. Because if I tell them what I bought it for, they're going to appraise it at that value. So I've heard stories of someone who bought a property for 150 privately. And the appraisal came back at 310. And the bank had no idea, the lender had no idea what you paid for it because it's a private agreement. They can't, and you didn't disclose it. You didn't share the price. You can do that. They just come out and appraise it and they put a mortgage on it, especially commercial property. They'll loan you 75, 80% loan to value. People have bought properties and been paid by the bank $80,000 to buy that property. Yes. I'm talking negative 20% down, not zero down investing, negative 20%. So private deals can be really extremely lucrative if done properly. You just literally don't send the agreement to the bank at all. Like you black out the price and you say, appraise this property. When it comes back out, I want 80% of the loan to value. And banks there are financiers who will lend on that. So yeah, it's risky though, because if you have a mortgage on a property for more than you bought it for, then obviously you're levered up all the way. Okay, skin in the game, right? Which is good. You actually want that, really. How long do you hold a piece of real estate before refinancing? As quickly as I possibly can. No, it depends on the project. Every project's different. Some I've refinanced in 120 days, some years before I refinance them. And 2 years later, I just put a mortgage on it. I got 100 grand out and I bought 2 more properties. Sometimes I wait to refinance it 2 years because I'm trying to buy other deals and I don't want the refinance to screw up these other deals I'm trying to close. And so sometimes you're working with a couple lenders, the only 2 lenders who will work with you right now. And if you put in another credit score and they can see the credit hit, the credit score hit for another mortgage, they're wondering, what are you doing refinancing this property? What's going on here? And then it might screw up your other deal. So sometimes I've waited like a year or two to refinance a property, knowing I have the 100,000 in equity sitting there, but I just take it out after. So yeah, every deal is different and every person's situation is different. So you refinance on your own, like whenever you feel, the timing is right for your situation. Obviously, sooner is better if your goal is to get cash out and buy more properties. Soonest you can do it is a few months. You can get refinanced in 6 months if you want to, especially if you register the property where they can't see what you bought it for. That's a great way to do it. Invest with banks and invest on banks. Don't know what that's referring to, but yes, they pay solid. Most financial institutions in Canada, the big 5, they all pay fairly healthy dividends. So it's a safe place to put your money. I would rather be the bank than invest in the bank. Doing hard money lending, like you can do hard money lending at 15, 20%. I know people that lend at 20% all day long unsecured for real estate flippers. And these guys will pay it because they need 100 grand to flip a house. They're going to make a ton of money. They don't mind paying you 20% interest or 25% interest. It's risky, of course, because you're in the second secured position on this property. But you can do first secured mortgage where you're secured in first, right? You can actually take back the property if they don't pay you. And some of those first mortgages go at 10%. So 10%, and you own the property effectively more than the investor does, because if they don't pay you the mortgage payment, you go take the property back, it's your property. And if they bought it for a deep discount, you invest on that deal, it's not a bad deal. So hard money lending can be great too. You're basically acting as the lender. And SF, of course, I do invest in stocks. I do have some stock holdings right now. Yes, Kyle, definitely we'll figure something out. Financial Wolf says, how long do you hold a piece of real estate? We talked about that question. Is there a real rule of thumb? It's tough, not really. If we're looking to buy a property, how can we contact you? Ramsey, shoot me a message on Instagram or Facebook. You can add me on Instagram or Facebook. It's a great way to get a hold of me. I also have a Gmail account you can send stuff to. What's the one that I put up on my YouTube? I think it's rosehartcoaching@gmail.com. You can send me an email there. The best and fastest way is through Messenger and Instagram to get a hold of me. I try to always respond to those messages within like 24 to 36 hours. That's a great way. I'll give you my phone number directly through that platform when we reach out. I'm not going to give my number over here because that'd be crazy. But yeah, that's one way that we get involved. And then we have a discussion about whether or not it works, and I'll run some deals by you, and eventually you'll see a deal that makes sense, and you'll jump on it like a viper because you see it's 100 grand upside. If a deal's good enough, I don't have an issue finding an investor. Like most of the deals I'm finding are so good that I talk to 1 or 2 people about it and it's already gone. I don't even have a chance to talk to 3 or 4 or 5 people about it in my network. But as a last line of defense, I will buy any property. Any property that I buy, that I offer on, I buy them first in my name and I transfer them over to the investor. So I have control of the deal, it's my deal. And I will give the deal to the investor if they give me percentage of profit and they allow me to manage it and they sign our contract. But effectively, I give them most of the profit. Like they take 70% of the deal and I get such a small percentage, and you're saying to me, well, Mike, you have the cash. We know you're a millionaire. Why don't you just buy these properties yourself and make all the money for yourself? In these 11 deals you've done, you would have made over $1 million. And it's true. I added up. We're going to be close to $1 million in money made in these 11 deals for the investors already. So, in like a two-year period from now. So they're saying like, Mike, why wouldn't you just make the whole $1 million for yourself? Well, because 1, it's no fun doing it by myself. And 2, I can't scale. So I could do 10 deals by myself and make $1 million, but I've been on the loan path where I did my first 10 deals by myself. And I've done this other path where I can scale up really quickly. And I don't need the money, right? Like it's not even about the money really. It's about the size. Like I want to walk into a room and be a BSD just cause, and I wrestle with this. Some days I want to be like low key. I want no one to know who I am. Other days I want to do the YouTube and I want people to know who I am. And I want to have an influence on people's lives. And I think the bigger I get, the more influence I can have, right? On people's lives and have that impact. So if I had 1,000 properties, I'd get a meeting with pretty much anyone. Like pretty well anyone in Ontario will have a meeting with me with the 26, I'll be 26, 27, 28. Let's say I'm 29 years old, the 29-year-old guy with 1,000 properties, right? Like who controls $250 million in real estate. I mean, most people will have a meeting with me. So then I can have more good, more impact, right? So that's more why I'm doing it now. It's less about the money. The money will follow. And if I make investors $1 million, they'll be really investing that $1 million with me. They'll want to invest more of their capital, right? So it's one of those things where that's how you build a big company. Is you take a loss, you become self-led. Like I'll take a lot smaller of a cut so that I can build a company and build a foundation and build something that's really, really cool for the world. So yeah, I guess that's sort of my answer. I don't know if it's a good enough answer, but it's the only one I have right now. Emma, yep, good points. We can document that first investment there on that one. Your properties on Facebook looked amazing. Thanks, Zale. The renovations. Yeah, you should have seen these properties before. Wow, 31 people on, guys. This is nice. This is awesome. I have a secret goal of us getting to 100 on a live stream. That would just be like, if we could share it and get it to 100 people, that'd be so cool. Yeah, so I do good quality renovations. Most of my stuff is like quartz counters. I do it really nice. I do it really affordably. Depends on the property. Some properties are B-level properties. They don't need the same quality renovation than an A-level property does. But the better you renovate the property, the nicer you make it, the better the resale premium, and the better the rents, and the better the quality of tenants. The big thing is the quality of tenants. It's a lot easier for me to manage quality tenants that pay the rent on time, that are well-to-do. The well-to-do tenants want to live in nice places. The not as well-to-do tenants are okay living in crappier places on average, as a general rule of thumb. There's obviously variations to that. Martin Blazowski, I've been watching all your videos, Mike. Great work. Thank you as well to all the viewers for the great questions. I've been learning a lot. Hey, Martin, thanks. I appreciate that a lot. Who do you insure your properties with and at what deductible? So right now I just mostly through cooperators, and I have another guy at McKillop and another guy who I can use on occasion. I'll recommend the investors to. Honestly, like the guy, like my own policies are really cheap. I do a $4,900 deductible. It's the highest possible. So a $5,000 deductible. they know I won't make a claim less than $5,000. So if I make a claim for $8,000, I have to pay a $5,000 deductible off of that money back from the insurance company. They know I won't make a claim. If my basement floods, I won't make a claim. My roof needs repair. Shingles got blown off in a windstorm. Happened this year on 2 of my properties. I had to put 2 new roofs on. If that happens, I don't call the insurance company. My rate's going to go up anyway. So I only have insurance for liability. Like I have a $2 million liability policy, and that's there in case I get sued. That's where I'm really worried. Like, and I'll pay a $5,000 deductible. If the policy, like I have to pay $1 million to someone, the company puts up $995,000. I put up $5,000 in the lawsuit. That's cool. I'm willing to tolerate that risk. I have that risk tolerance. But my insurance premium is like $500-$600 for most of my rental properties. The house I live in is like, there's a fly there. The house I live in is like $470, I think, for my insurance policy for the year. If you own your house with no mortgage, you can have no insurance at all if you want to. In a rental property, you need to have insurance, guys. If it's not in a corp, you need liability insurance because you don't want to get sued, right? You want to have that insurance there as a wall. Even if you own your property personally, your liability is totally protected if you have a wall, a $2 million liability policy on that property. That's a wall between the tenant suing you and anything happening. It's there for big emergencies. Anything small, like by the time you go through insurance and all the crap with that and like your rates go up, honestly, I had a basement flood and I talked to the insurance person. I could have done, gone through the insurance, but I thought, you know what, I'll just fix it for it was like $3,000 to put new floors in and fix the drywall. Honestly, I'm not a big fan of insurance. I think it's a bit of a scam, especially car insurance. I have a $5,000 deductible on my car too, because my insurance on my car is like $80 a month. It was $300 when I first started driving. So getting insurance down to $80 was definitely helping the FI fund. I self-insure, so I have my own kind of insurance reserves, let's call it. Other than liability, you want to protect yourself from a big lawsuit. Definitely recommend that. To each person their own, right? Like I'm not saying my way is the best way. It's just the way I've done it. I've probably saved $20,000 in insurance premiums so far on all my properties and car insurance and everything in total. So would I have made $20,000 in claims? Probably not. So I'm further ahead for reducing my insurance down. Okay, let's go up and hit some more questions. Cough, cough, photographer, videographer. There you go. Yeah, Hark's Creative is fantastic. He's trying to build a business, really hoping that it takes off for him. I promised you guys that we will go outside of the tiny house. Do you guys want to go out? Let me know if you guys want to go out. We'll go out and check out the office. I'll turn on the lights and go out there. We have 31 people. We'll go for a walk right now. Why not? Mr. Beefy, write your question. I said I would go outside. Hey, Mike, I live in a house hack, and whenever I moved in, I wasn't able to get my double bed up the stairs. Had to use a ladder to fit it up and through the window that comes out easily. Wow, nice. That's intense. What would you do when you rent it out and tenants can't get their bed upstairs? How do you help them? Yeah, that's an issue. I've never had that issue per se. I've had once where a king bed wouldn't fit. I had once a queen bed, the box spring wouldn't go down the stairs to the basement around the corner. Can you reconfigure the house in a way that allows you to get a double bed up the stairs? Even a foam? Like what about an Endy? Like there's like all these foam mattresses that are taking over, like Casper and Endy and all these mattresses. They roll up into a little ball like this. So I would say, and those mattresses are more comfortable than most of the box springs. So I would say just bring wood slats up in a wood frame. That'll fit up the stairs, no problem. And then get like an Endy mattress for $500. The best sleep you'll ever have. And it like literally unfolds like through like air and stuff. I have a thing that rolls up. So just get your tenants to get it. Like the mattresses are moving towards that anyway. So that's one solution. Or find a way to, for resale value, I think you'd want to be able to get a bed upstairs. So maybe find a way to reconfigure the space so that they can get up there. Maybe you add in their entrance or something. We have 33 people on. Damn good. Progress. We are growing. Progress. I'm going to take you guys outside. We're going to go to the tiny house. Let's do it. Why not? What would you rent it out? What would you do to rent it out? We talked about that question. So I'm going to remember we're stopped at Emma's. So Toronto Airbnb condos. Let's go outside. Let's go outside and see the tiny house, guys. You guys getting a little cribs tour. Should I go through my backyard or go through my front? Anyone? Anyone? Hopefully my Wi-Fi stays on. Maybe I should turn these lighting kits off. We'll go outside. We'll end it off outside in the tiny house, in the office. Front. Okay, we'll go at the front. There we go, guys. Oh, back and front. I'm already going front now. Sorry, all my lights are off, but you guys can see my kitchen. Here's my living room. There's my TV. Woohoo. None of my lights are on. Let's go outside, guys. Put my flip-flops on. We still have 27 people live. Hey, world. We're going to the tiny house. I'm walking backwards. Hope I don't trip. I'm gonna put like a little sign, I'm thinking, right here. Let's go on in. Let's go on and see it. You guys see my backyard? Check it out, guys. Can you still hear me? The lapel mic's connected. That's my new shed that I built. We have 30 people in here. Cool. You guys get to see what it's like. These are the egress windows that I put in, guys. I built this deck. We cut that big window out and we put in a patio. Yeah, I cut the egress windows in for the basement apartment. I have a 2-bedroom down there. It's my backyard. It's an awesome backyard. Like, there's tons of mature trees, and my daughter that's our trampoline over there. It's my daughter's play swing. Yeah, you guys want to see? I'll take you back. I don't know if my Wi-Fi will cut out. We're pretty far from my house. If it starts cutting out, sorry guys. Look at this. You see the beam in there? We had to put this 12-foot beam across, this massive heavy beam. It was fun. But yeah, let's go in the tiny house. As you see my shed, I still got to do some work. I got to put a window into it. There's supposed to be a window right here in it, and I got to put another window in. And you guys want to get a view into my tiny house from the trampoline? Oh. Whoa, whoa, whoa. There's the loft. There's the loft, guys. All right, let's go in. Let's go inside. And then we'll have some more real estate questions. Okay, so this is the tiny house from behind. Boop, boop. It's 12 by 10. It's a very small place. It's got brand new energy efficient windows. It's winterized. It's insulated and heated all year round. Max, tell you what, when you come to London, anytime, Max, you come here, you stay in this tiny house for free. I'll have good times. Okay, so I'm going in. Oh, I forgot to give you the walkthrough. Okay, we're going into the tiny house. Woohoo! I'm still connected. Can you guys still hear me? No, I've never jumped out the top window. Okay, so these are the floors. I actually installed these floors myself last year. It's a nice hardwood vinyl plank. Where should we set up? I don't know if the Wi-Fi is going to kick out because we're up in tiny house now, but it's still streaming okay. Sweet. So what do you want to see? You guys want to see? There's 12-foot ceilings up here. There's a loft. Let me go over here so you guys can get to see. So, what do we see? Mic issues. Thank you. Better? Better? The 29 people who stayed on are my loyal followers. The mic fell off. I'm sorry, guys. Failed you. There, is it better? Paul, how you doing? Hey, there we go. So what I'm going to do is, I guess you guys can't really see this. We got a futon that pulls out there. What I'm going to do is, right here, right across this, I got a live slab all the way across right here. It's going to come way further out. That little shelf there wasn't working. So I got this huge 7-foot countertop ordered. I'm going to move the microwave and get rid of it and run it right over top in front of the fridge. And it's going to be my office. I'm going to put a rolly chair there. And that's going to become my setup desk where I can look out of my backyard. And we'll get some storage going. So when people come in, then I'll have my office over here. Then also over here, we're going to leave. This pulls out, so that's kind of cool. I actually built this. You guys don't know this, but I actually built this tiny house. All this construction work was done by me. This is my TV. It's a smart TV. My fireplace. It actually works. What I'm going to do is, oh, it's not plugged in. Oh no, it's not plugged in. But it has a really cool flame effect. Like, it looks like a real fireplace. What we're going to do is I'm going to move this over to over here. It's going to sit right there. Can you see that? Not over here in the area where the mirror is and the hooks and stuff, but more over right here. Move the fireplace over. And then I'll put my desk, my 4-foot by 24-inch desk. So I'll have one desk there. I'll move this over here. This will be our office area here. And then we'll have like our guests sit over here. I'm going to mount the 40-inch TV on the wall over here. And then we're going to have our scrum boards set up on these walls here and this one back here. So we'll have we'll each have our side-by-side 5-foot desk areas. So it'll be me and my partner. And then we'll have our TV mounted on the wall. And I guess you can't really see this. It's a decent space. Like, it's actually a good amount of space. And it's winterized all year round. Let's go up to the loft, check it out. Mehmet, how you doing? We're doing a live tiny house tour right now. I stripped the bed right now, so just ignore that. But yeah, let's go up and sit in the loft. I'm gonna sit right in the loft here. Oh, yeah, we're sitting up in the loft now, guys. It's chatting. I don't know if you guys can still hear me. Do we still have mic is operational? Max, you need to watch this on replay because I was talking about you earlier when we were talking about flipping cars. And Max, we need to have a powwow sesh. You remind me of myself in a lot of ways. Yeah, so this is the bed up here. I could probably push it against the wall a bit more, but nice and comfy. Like let's lay down and see what it's like to stay in a tiny house. Because I was used to Airbnb this, and I tried it one night, and not bad. Like my hand's fully extended, and I still can't touch the roof. Fairly comfy. Got a light switch there when you go to bed. Let's see what it's like to sleep in the tiny house. Oh, look how nice. I still have the lights on downstairs, but look at this little tiny house. Built it for, I think I built this for $9,200 all in. And I've already rented it out for $9,200 in the last year. So I got all my money back. Yeah, I mean, the office could go up here. I'm sitting on a mattress right now. I still have like a decent, it's probably at least 5 foot something up here. But no. This is if we have guests stay over or contractors. I need a place for people to, I need a place for people to stay. Let's turn this back on. LED lighting, of course, guys, because, frugality. Yep. I don't know about the roller chair up here, but you guys can see my backyard a bit. There it is, my trampoline. I still got to answer some of these questions for you guys. It's very comfortable. I actually rented this space out. It's fantastic. But I need it for the office now because we're expanding, we're growing. I have people coming over to my house. I have investors and clients and all sorts of people I'm interviewing. And I need a place I can sit down with someone and have my wall-mounted TV and sit across from them and have us both sit in our desks. And for now, this space is going to work for us, I think, for the business. I have an access panel here. I got to fix that. I had to do a wiring repair. But yeah, there's our breaker. Put that in. But yeah, there you go, guys. Let's sit on the couch. And hopefully, I'm in the corner of my tiny house, so hopefully you guys can still get signal. I actually ran Cat 6. You can't see it. I ran Cat 6 underground out here so that eventually I could set this up somewhere. Where are we going to set this up? Oh, right here. Is that going to be good? Can you guys see me? Armand, I can't wait for that question. We're going to have a good chat about that. I want to make a video on that topic alone because story of my life, I've just been... Can you guys see me? Is it okay? My TV's in the way there, maybe. How is this, guys? Can you see me? Can you hear me? Lapel mic's still hooking up? Yes? 31 people on. There you go. You guys got to see a mini little tour of my backyard, everything like that. So, Lee, how you doing? Let's hit some of these questions. This chair I'm sitting on has to go. It's such a squeaky chair. I'm going to bring this back in my kitchen and put it in my island. I'm not feeling this chair in this tiny house. By the way, if anyone's from Toronto or area and you want to come down and visit me, you want to take me out for lunch, that's the cost for coaching. Take me out for lunch. It's free. Excited this Saturday to actually meet up with Dan, Sarnia investor. I'm going to go check him out in Sarnia, and we're going to have a little coaching day together, and that'll be fun. Okay, let's hit some questions. I promised I'd get through all these questions. I'm really excited for the question that just popped up. Talking about Airbnb in Toronto. Been there, done that. Not the best plan now. So yeah, in Toronto, it's very difficult to... This chair is so damn squeaky. It's not the best, I think, in Toronto because you're paying like $600,000, $700,000 for a condo that will bring in the same Airbnb rent as a $250,000 house downtown in London, right? So it's kind of hard to compete with that. It's sort of my thoughts on it. Okay, let's do this. Next question. We stopped at the Airbnb. That was our place marker, right? Scrolling up. Did we hit these questions here? Yeah, we hit that question there. Mr. Beefy, there's Emma. Okay, I found the spot. Sorry guys, I had to scroll all the way up again. I hear people doing that, but I heard the landlords are not liking it. You know what? If someone came to me and asked me if they could rent my place for $1,500, and they said, hey, I know I can get $1,800 for it. I have someone who's international, and I don't have connection to that person. I would happily rent the place for $1,500 I'm making profit. That was my target rent. If they can go make 1,800, cool. There was a time when as a landlord, I didn't want the hassle of having to try to find the best and the cheapest. And I would say, you know what, guys, like just do it. There's nothing wrong with that as a landlord to take on someone and let them make a little bit more, make them hustle. There are a lot of landlords in this city, in the world, who are lazy and don't want to do the work. So just go find those guys. A lot of landlords don't mind, actually, if you go and sublet that or Airbnb the place. They don't want to do the work. And a lot of landlords, if you reach out to them, they'll actually, they'll approve it. They'll be like, oh, that's sweet. That'd be great if you did that. Okay. Oh, I lost my place. There we go. Okay, I hear people doing, we read that question. Thoughts on renting out to a friend. He offered 10 to 15% less monthly than others have offered. I feel bad haggling the price with him. I know he maintains his current apartment well, so there are pros and there are cons. This is a difficult one. Do you rent to friends? I have rented to friends before. My own mother lives in my triplex, one of my triplexes that I own. It's annoying. Like, she complains and I have to, there are pros and there are cons. I try to avoid renting to family exclusively. They want a discount. They tend to complain more than anyone else. You have to service them. If something bad happens to the property, you feel extra bad. And remember, like, here's my thoughts. Like, real estate is a business, right? And a lot of people develop relationships and friendships with their tenants. That's not a great idea, actually. I think you're better off not developing like those friendships with your tenants. Like, yes, have a professional relationship. I'll bring a gift to my tenants at Christmas, or we'll give each other like gifts at Christmas, or we'll be on talking terms if we have a good relationship. But what happens when they don't pay their rent on time, or something happens in their family and they have to ditch on their lease, or things happen, right? And damages to the property, whatever. Things happen between tenants and landlord. And it's the same as going into business with your friends and family. Just be very careful, because I hear really bad things about some people who have gone into business with friends and family. When you're a landlord tenant, same kind of thing happens. Like, you'll give them a break on their rent to start, they'll get behind on their rent, or something might happen to the property, and you've got to, it's going to create a friction between you and your friend. So if they're not a super close friend, maybe like it's okay, you take the gamble and nothing happens and you'd be okay. But I honestly wouldn't take the risk with a friend. Why would you get 15% less? It's a business. At the end of the day, you got to make a profit on your rental property. So if you're just starting out, like at my stage in the game, my mom can pretty much stay for like cost, right? Like, I don't even like the cost of like utilities and stuff like that. Like, I don't charge my mom a lot because I want to take care of my mom. She was there for me in some of the times when I needed her. So when you get to my stage, like my stage in the game, I can rent to friends for a discount. I'm in the position where I can afford to do that because I'm financially independent. But if you're just starting out and trying to build your real estate portfolio, having a lower rent is going to affect your appraisal value. It's going to make your property less valuable. When you go to sell that property, if you go to sell that property, not even just to appraise it, you're going to have the downside of, you got to think about it, you're going to have the downside of like lower rent means lower NOI, net operating income, and overall lower cap rates, you're going to get a lower value. So yeah, it's difficult. What if you want to move into the unit, you have to evict them? It's tough to have to evict the tenant. It's business, right? And yeah, renting is not like a product. Like if I was selling a product, I would give it to a friend at cost, like whatever, I wouldn't care, just like one item. Like if I was selling like hats, I would give a hat to a friend at cost. But it's different with rental properties. It's someone's home, you know what I mean? I don't know. So I have mixed feelings on the issue. Mixed feelings. Okay, let's keep going here, guys. I can't believe we have 30 people on tonight. Like, people have been finding value, hopefully, with the stream. 29. Let's share it. Let's get a little bit more on here. Okay, let's go up. Yeah, Future Wiz just had a great insight there. Never rent to family or friends. There are no pros, only cons. There are a couple pros, like maybe they'll take better care of your place, but honestly, find a good tenant. You'd be better off finding a really good tenant that's like a better tenant or as good of a tenant as your friend is going to be, but then they're not family and friends, so you don't have to have that, like, they can twist your arm to get things, right? It's just not a good idea with business. General rule of thumb, I would say I don't rent to friends and family unless you're like financially independent and you're making a bad business choice because you can afford to do that. Like, if a friend, like I have a friend I want to bring into our business. One of the reasons I want to build this business is I have a couple of friends who have like jobs that aren't great, they don't love. I like to bring them in and make them sort of fire, but working in my business, like property managing and all that kind of stuff. Hey Zale, take care. Sorry to see you leave. Catch the replay. Take care. And, talking about like bringing friends in, I'd have a friend maybe stay in the tiny house for like no cost for a few months because I can. I wouldn't recommend that as a normal like thing to do, but like I let people, I had like my friend I coached, he stayed with me for 6 months, for 8 months for no cost, right? Because we're doing business, we're having fun. So you can get to that, like, it's not a good business decision, but yeah, sort of my thoughts on that. Let's hit some more questions here, guys. Okay. Hey, Mike, keep up the great work. Love the content. Thanks, Alex. Alex, I really appreciate that. If you're catching the replay, if you're still here now, that's awesome. Green Sequoia says, you can just vlog style when you're building your company. Yeah, I suppose I could. I could literally, I'm upgrading my phone plan to get a 5 gig package because right now I have low data because I'm so frugal, guys. My cell phone plan's like $23 a month for unlimited calling and like 500 megs of data and international texting. But I'm going up to now the 5 gig plan so I can do a little bit of streaming at the properties, take a little videos. If you guys want, I'll upload a progress right now. I have some progress videos on my phone right now. If you want after this video, I'll do a little video. I'll upload one of them for you. You can see exactly what's going on my rental properties because I took videos for the tenants. I do some, when I'm showing tenants from Toronto, some of them don't want to come down. They want to rent the place just through like Skype and video. So I'll take videos of the apartments. I can show you the progress update, some of these properties. So I saw a message was retracted. Don't retract your message. I didn't get a chance to read it yet. Okay, let's go up here and hit the next question. I flip cars as well. Angelo, nice. I'm a Ford auto mechanic and I rebuilt engines and flip them. Made 2,000 tops, but it's a lot of work and running around. Yeah, Angelo, the actual work of renovating can be a lot of work. It's better just to flip cars as they are, doing like a little bit of cleanup and like give a good car wash and a good sponge inside and maybe like fix a broken radio or something really simple. The bones of the car, if they're great, that's better off. Like a car that won't start and it's just a dead battery, that's an easy fix. But if you have to do a whole bunch, like a new like starter or a new alternator, all these things are more expensive, right? Like, yeah, getting into repairing cars, it's like getting into repairing houses. If you buy a really bad lemon and you don't have the skill set or the people to get that done. Like if I owned an auto, like for instance, I have a lot of construction guys. It's akin to me having like my own auto mechanic garage. If you have your own auto mechanic garage and you got guys working there for 20 bucks an hour or 25 bucks an hour or 30 bucks an hour in the shop, you can bring one of your own cars in when they're slow. If you're paying them a salary and they're there anyway, and they got some downtime, they can work on your own cars, why not? Then that makes sense to get into flipping cars. Same in real estate. If you build up the systems, then it really makes sense. Yeah, Tommy, that's right. Public mobile. If any of you guys are in Ontario or Canada in general, and you want to get a cheap cell phone plan, public mobile is fantastic. I get $1 off a month for any person that actually joins and they put my number down as the referral. So please message me on Facebook or LinkedIn. Mike Rosehart's my name. You can look me up on there, or Instagram. Message me and I'd love to get the extra $1 off a month because I'm frugal, guys. I love a deal. Nothing like a good deal. I love a good deal more than anything else. Okay, let's keep going up here. Monday, Wednesday, Friday. Okay, I could do Monday, Wednesday, Friday. That's doable. Would you vlog more? Yeah, I could vlog more. I actually did for 6 months a daily Facebook Live video every single day. So you can check that out. They're public videos, I think, on my Facebook. I was documenting the journey. Like I was like at properties. I was just like at the end of the day reflecting on what I've been doing. Most of the videos were done at like midnight or 1 o'clock when I got home and I was exhausted. So that's something you can check out. I can go back to doing those daily video journals, even like 2 minutes a day. Thumbs up, Daryl. Got a fourplex for 189,000 ARV, 335,000. Ah, effing right. Hey, that's not bad at all. As long as the renovations are, like 30, 40, 50,000, then you're looking at a huge amount of upside. And the more you do it, the more you'll figure out what the ARV is, and you'll get to know exactly how to forecast that and how much it's going to cost you to renovate. The more you do it, obviously you're getting deals, and you know what's going on. What would be your investment strategy if you're in a market that has seen high appreciation but the rents have not come up yet, i.e. following the 1% rule? 275,000 average house, average rent of $1,450. I would say that's in my market too. Like there are houses in my market that are, I went and looked at a house for $600,000 around the corner from me that's renting for $1,900 a month. Market rent, like maybe $2,000 max. There are pockets in my own market that don't follow anywhere near the 1% rule, like half the 1% rule, worse. I've seen 1/3 rule. But in London, there are also duplexes I've seen that follow the 1% rule and triplexes. So try and find variations. Even in Toronto, I know someone who does the student rental game. They buy these properties like duplex, whatever. They have 10 bedrooms in them. And they rent the bedrooms out for 900, 800 bucks a bedroom in like Toronto downtown. And they actually 1% rule, the student bedroom thing. There are people at Airbnb in Toronto get a 1% rule. There are ways to stick at the 1% rule in any market. Like even in New York, you can do it in any market. Totally possible to get the 1% rule with more effort and with certain strategies. So look for the strategy and find the one that works. Everyone's strategy is a little different, but you kind of got to weigh the options and figure out, if there's a way to make it work in your market. I would say that, like, I know a lot of people come in London and look at condos, they're like 300 grand here and say they rent for 1,500, London can't work. But they don't, like, how am I getting this deals in the same market? So there's just so much arbitrage in the market. Like 9 out of 10 deals are bad. So most real estate investors I meet who have like, say 5 properties in London, most of them probably didn't get a good deal on the property, probably didn't maximize and they weren't efficient. There are people with 10 properties in London. I know guys who are old guys who have like a bunch of properties and they just aren't efficient on the buy. They don't rent them for the right amount. They aren't efficient, and that's cool. They're still making money in real estate. You can make money in real estate even if you suck. Like even if you rent it for under market rent, you don't do any renovations, you just buy properties at full market value, you can still make money in real estate. Like it's so easy to make money in real estate, but to be like that A player, to get the max amount of efficiency, the lowest renovation cost, like so you can just go buy drywall full price and pay contractors full price. You can do it. You'll make less profit, but you still make profit. Like guys are still making money and they'll tell you stories about how much money they're making. But yeah, I guess it's all about finding that niche in your market and exploiting that. So sounds like $275,000 purchase price. I bet you could duplex one of those properties and you'd be able to get like 900 bucks for a lower apartment in the basement and maybe still like $1,350 up top. And all of a sudden you're getting a lot closer to that 1% rule. So find a way to re-engineer the property, find a best use for that property. If that property won't work, look for another property that will work. And there's always a property that does work. Even like I say, even in my market, there are tons of properties that don't 1% rule, and there are a lot of properties that do. In the good areas, it's hard. Okay, Harks, thanks for letting me know. I could bring out like the Cat 6. Hopefully it's not too bad. Is it better now if I kind of move around a little bit? Hopefully you guys can still hear it. I want to hit that question before we go today, even though we're 102 minutes in. Yeah, I built the shed. No, I don't jump out the top window. Backyard, yep. Hey, Mike, have you invested in Scarborough? No, I have not. What are your thoughts? One Natty Dread. My thoughts are kind of, Whoa, phone just dropped. Is it better now if I'm walking around? Maybe I get better signal if I do go ahead and walk around. I have invested in Scarborough before, so I don't know a whole lot about that market, but other than talking to people and that sort of thing, I've talked to people and heard their thoughts on it. It's better than Greater Toronto, like the general, like right in Toronto. Scarborough's kind of on the outskirts, but Scarborough's got rougher tenants for the most part. I know people that do the by the bedroom thing and they do okay there. So I don't know. Some people make it work there. Anyone else having issues with my signal? Is it better if I stand? I don't have my stand is inside, so I'm holding it by the hand. Okay, let's get some more of these questions better. There, okay. Next, backyard, yep. Jump on the trampoline, mic issues. We got those fixed because I think I knocked the lapel mic right off. So, yeah. Let's go down here. Paul, how you doing? I see you said yep in there, so you're watching. Semi-formal says better. Carolyn says well done. Lose connection, looks great. Mehmet, how you doing? Max says deal. Max, you gotta come to London. I want to have you on my channel. I think you belong on my channel because you would inspire a lot of people. You know, like there's not a lot of 16-year-olds that are 17-year-olds that are flipping cars, right? Like, I think when you get into real estate, it's gonna be in a big way. And we should document your journey as you just start out I think a lot of the people watching would like that, see someone starting out and see them go through the steps. Financial independence versus being rich or a millionaire. Yes, guys. Sorry, I'm gonna set this up. I'm gonna stand back. Can you see me? Is the signal working? We'll do some aerobics. Tiny house aerobics. Okay, waiting for this question, the drum roll. This is something I battle with. Retirement versus being like a millionaire. And it's sort of the greed question, right? When I started on this journey, I thought that the most important thing was just elevating myself from poverty. And so then I realized that once I'd moved away from home and kind of was going off to university, I was sort of already starting to elevate myself out of poverty. I realized that I thought, that big house and that nice car, like the sick whip and the white picket fence, that whole lifestyle, it's what I wanted. And in part it is, but then I discovered at like age 17, 18, this whole FIRE, it wasn't called FIRE then, it was like this term FIRE, financial independence, retiring early, is a newer thing. Back then it was just called like early retirement. And there was like Early Retirement Extreme was the only guy I knew that was blogging about this. And before that, there was Vicki Robbins was writing her book, Your Money or Your Life. And in 1993, when she published that, like a year after I was born, around the time I was born, right? But that was when the idea was really first released, right? That you could live really frugally and manipulate this equation that would allow you to live for the rest of your life with no, need to ever work. And then I thought, wow, like when someone said to me the first time, like, working is a prison, and like you're basically like still in prison, you're a slave effectively, just like there were in the 1800s. You're a slave. If you work for someone else, you're at their beck and call, you do exactly what they tell you to do. Like in a lot of ways the relationship is a lot like slavery. And like in this, like a slave would, if you watch any of the movies, would have their downtime, they have their own places outside, they'd be treated as a lesser, they'd get downtime, but they had to work long hours. Slavery is just like the employer relationship, I felt like, in a lot of ways. And I felt like employee-employer relationship was always like a conflict. And so I've been always driven towards entrepreneurship, but I didn't want to be an entrepreneur that had to sell or had to grow my company or had to be like taking a salary from that. Because then I'd be motivated to make sales that I didn't want to do, or maybe I'd be motivated to do unethical things, or I would have to work harder than I need to. I would just want to do it because I love it. And so I think every entrepreneur should come from a place of fire. I think the best entrepreneurs come from a place of fire, where they have a financial independence mindset, and they can really be super frugal, and they don't need to max themselves out personally, because that puts you strain on your business too, right? You're trying to grow. So that's where it kind of came from, the idea of fire for me, right? The concept that like there's this thing called financial independence, and you can retire early and never have to work another day, and your passive income covers your lifestyle for the rest of your life. And if you want to be home with your daughter, you can be. Like if I don't want to go out deal hunting tomorrow, I'll just clear my calendar, don't do anything, right? I can pay people to do everything for me. And so that's the nice thing about being financially independent, is that it's not about the money. Like I literally do this because I love it. I love hunting for deals. It's my favorite part. I like talking to investors. All the investors, I'm sure some of you guys are watching who are my investors. I like to talk on the phone. Like you can get me on the phone for an hour or two. You take me out for lunch, I'll talk for an hour and a half, right? I'll talk your ear off. I'll answer any questions you've got. It's just like this, right? But more tailored one-on-one. And I don't know, like for me, I just talking about like fire and freedom. It's just, I think we're meant to be doing what we want to be doing with our lives. I think we're meant to be free. And the only way, like society in general doesn't want that. I think the people at the top don't want that. Like even I want that, but I'm selfless. But most of the people at the top want their employees to be loyal. They want to be I want to be able to give my contractor like $30 an hour and him show up for that crap job to like pull shit out of a toilet. And do those dirty jobs. I want them to be able to do all of that. I need them to not be financially independent so they can work for me. So there's an incentive, right? Because if they don't need money, then why would they do those jobs for me? Why would they do X and Y, right? So sort of my thoughts on it are, I don't know how I think it would be a utopian society if everyone was fire and we would all just do what we loved. And I mean, I guess those jobs that no one wanted to do would go up in price until the person who's at the bottom who isn't FI would take those jobs, right? And it would balance the economy out. But going back to like that overall arching thing, when I unlocked financial independence, I took that trip. You guys know I went to out west all the way through the Rocky Mountains and to Vancouver, and then I flipped to the Yukon, and we went all around. It was a great trip. I finished that, and I went on vacation. I'd sold 11 of my properties off, and I thought, the market's at a pretty good point. Things have at that point, things have come up with 10%, 8% in the market, and I thought, wow, that's the best London's ever seen. 10% appreciation, it's great. I'm financially independent. Like I can just take all my money out of real estate, no stress, no tenant calls, no problems, no renovations, no employees, nothing, and I could just relax and I just enjoy life and invest put it in dividend stocks, ETF portfolio, collect my 4%, so collect my $40,000 a year for the rest of my life. That's my like $3.5, $4,000 a month forever. And I'd be fired. And I could travel, I could do whatever I want, spend time with my family. But then, I don't know, something just like was, you can ask my wife. I went through like, I had like depression. Like I'd be sitting on the couch watching TV and just like relaxing and like, and then my partner's here buying properties and stuff. And we ended up doing the business together, but he's coming over and he's like, yeah, I'm just closing like 2 deals. And I'm like other friends of mine in my network, like Dylan and all these guys, like Matt and just everyone, and Kellen, all the people, Tom, everyone in my network just getting deals. I hear that and I'm like, oh, I miss it. Like I miss the deals. And so then you can find me out there at like 1 a.m. out in my living room on my laptop or at my tiny house in my laptop, looking at MLS, looking for a deal. And I'm like, and I was like, stop, Mike, what are you doing? And then I'd like open it up again, open my laptop up and look for deals. It's like, oh, Mike, stop. No, you're retired. You can't, Mike. So it's one of those things where I just couldn't, for me, I just couldn't stay out of it. I needed to still be involved in the deals. And so at that time I said, well, I'm going to keep some of my money out of real estate. I'm going to buy some more properties. So I bought some more properties. Personally, I went from 4, my lowest point I had 4 properties. And then I bought some more. Now I have like 7, 8. And then now we did 11 with the investors. So and we're still going one a week. And I'm wrestling. Right now I'm feeling like I'm going to grow. I don't know for how long. I don't know if at any point it will just stop. I don't think so. I think I'm committed to this track now. And so what I'll end up doing is replacing myself, like getting people to good property managers, good contractors in place, good people. Effectively, I want to build a company. And a lot of what I'm doing is just talking to you guys, talking to investors, educating people. If I have a $250 million portfolio, I can get on a stage in front of people. Most people will take me on a stage, right? And my message can get out there and I can help people. And I don't know, for some reason, people just want to listen to a guy who's got more properties, who's in the trenches doing it. They don't want to listen to a guy who did it, right? They want to listen to a guy who's doing it each and every day. And so I think part of my calling, I did a lot of reflecting. I think part of my calling is to help people. I don't know how that is. You guys know I actually in January, I came out of retirement to study. I got my LLQP and mutual funds licenses, and I was working as a financial planner. And so I love that. I love personal finance. Like that's my root. That's my rock. Real estate is also something I'm really good at. So, the two together, that's what I do well. Like I do real estate and personal finance together. And so, yeah, I don't know. It's one of those things for me where I wrestle every day. When's enough? You want good people? Why do you keep your I think you're a good person. You're a good person. We'll get you trained up in real estate. You're getting better with the videos, with the editing. Keep practicing. You'll get better. Start a company. Just to not we'll get you fire first. We'll use real estate to get you fire, Kyle. But yeah, I think between I don't know. There's 2 sides of it, right? There's like a devil and an angel on my shoulder. One saying focus on your family, travel, do what's fun for you. But part of what's fun for me, and not all of it is fun. Don't get me wrong, the renovation stuff, I don't love that stuff. The stress right now of everything, we have so many tenants moving in September 1st and all the deals closing. That stress isn't great. I don't love that. But I love the deal hunt, and it comes part and parcel. So for me to be able to keep buying properties forever, I need to become an agent for myself or something like that. So need to keep helping investors in some way. And I feel good helping people. So when I make someone $50,000 as an investor, they're a part of my network now. And I have that social capital, which is more valuable than real capital. Like Bill Gates and Warren Buffett and all these people they have social capital. They can walk in a room with no money. They can put no money in a deal and they get half the deal just because their name's on it, right? Just because they're part of that deal, because they have that expertise in that network. So social capital is super valuable, and I'm growing social capital right now. And I don't know. I don't know what the future holds. I don't know whether it's best to be Armin, to answer your question, when's enough? If I get a 10 million net worth and my stuff grows, my growth rate's 20%. So 10 million, I would make $2 million a year. I can't even spend $2 million. I can go to a car with scissor doors. It's a Lambo. And the lease payments are nothing. It's a drop. I can go to a mansion. And by the way, guys, I do want to get a castle in London. It's a secret it's on my dream board in my office. I secretly want a little castle. But that's the ego in me, right? I know that I don't need that. It's just a stupid thing that is just there as a goal right now I'm moving towards just because I can. I need to have something financially driving me, or else, what's the point in making all this money, right? I gotta have some end. So yeah, I go back and forth. Some part of me wants to be that guy who's super successful Other part of me wants to just be low key and retired. Go back and forth. Do what's best for you. I think having that financial base, at least, no matter what happens, even if my businesses fail, if like the world comes to an end, I'm good, right? At the end of the day, I'm good. I saw a question pop up with sports, but it's been retracted. I used to be a competitive swimmer and a competitive varsity fencer. Weird sports, I know. I grew up on the beach, so I did a lot of swimming. I love swimming. I did a lot of video game playing and like professional level video game playing. Like I wasn't in competitions, but I don't know. World of Warcraft, I was one of the top players. League of Legends, like I'd play ranked. You know, I got to like not like plat or not quite plat. I think I was gold tiered. You know, Age of Empires 3 I used to play competitively. Age of Mythology, Star Wars Galaxies Online. Big into gaming. I enjoy a good game of soccer once in a while. I'm big into weight training. I used to be big into weight training. Like I'm not now. You guys are like, who is this guy? But I used to pride myself on like, literally I would always have like this solid six pack, and like I don't really now anymore. But like I try to pride myself on keeping very fit. So fitness is important. I'll hit the gym and do a lot of cardio. I just try to keep my heart really good. I'm not a big guy. Like I'm not huge, but I'm really cut. And so I just try to keep like that for sports. That's sort of really all I have right now. Oh, phone just fell. Sorry guys. Yeah, so that's me. That's what's up. This is just like vlog style. Hopefully I haven't put you guys to sleep. If you're liking it, hit the like button. Question retracted. What did Charles Winbird say? I'm curious, Charles. Let me know what you said. Public mobile, Tommy says, not too long ago. Yeah, that's the plan I have. It's I think it's $2 off on Autopay as well. So the 4.5 gig plan is 38, and then if you have people who are on your family or whatever on your plan, then you get it even lower. So it'll probably be like $35 a month for me. Some equipment storage built underneath the loft. Tripods, lights would fit under there, no problem. Yeah, we'll have to deck out this space in some way to make it work. Public mobile, check it out. Yeah, that's right. Max says that's what I do. Just general cleaning, simple fixes, return on the money, maybe slightly smaller, but the return on my time is far better. Yes, return on time. I want to do a whole video on this on real estate because some people do all the renovations themselves. And in the beginning, that's very good. I think it's a great idea to do your renovations yourself in the beginning. Once you learn how to do it, then you can manage people, right? If you know how to drywall, you can see if a guy's drywalling properly. You can give him tips and pointers. If a contractor tells you, oh, it costs $1,000 extra for this upgrade and it's done already, how do you argue with him on the price if you don't know what was required for him to get that work done? So I would say learn how to do everything. Like I know how to jackhammer a drain and run plumbing in the degree. And like I know, not everything, but I know how most things are done. And I can tell when things aren't done properly. And sometimes I'll play stupid and pretend I don't know so that I don't offend the contractor or whatever. But like at the end of the day, I know how most things are done in the house, from, you know, the tar paper behind the studs to like the building code. Knowing the Ontario building code and the Canadian building codes, very important. National building codes, very important. But I know flippers who are still like, they're 8 houses in and they're still doing their own renovations. Like, no, bring in guys to get stuff done, bring in subs. Like your time, the time value of your money, people don't factor in the value of their time and the time value of their money. So my big recommendation would be to definitely consider those things. Bring in systems. Like it doesn't make sense for you to be doing all your own renovations on your like third and fourth and fifth flip. If you can get a renovation done in 5 months, your opportunity cost is, let's say this house rents for $3,000 a month. You're losing over 5 months $15,000 in rent and your carrying costs and everything else. So I'm a big fan of I don't know what you call it, but like outsourcing, I guess, finding subs to get the work done. So you can get a renovation done in a month instead of 5 months. And actually, maybe it costs you $10,000 more than doing it yourself. But one, you free up all your time to find more deals, because if you're a real estate investor, your time's better spent actually finding deals and talking to investors and financing and finding tenants than it is really in doing the trivial like renovation stuff. Honestly, I think you should get out of that, elevate out of that by the time you're in your third and fourth deal. You shouldn't be doing any of the work anymore. I literally won't I've made a rule, I will not swing the hammer or the drill. Like, I just won't do it. I'll outsource everything now. I can still do it. Like I think I'd help. Tomorrow I'm gonna go over and help a guy put some cabinets up. I'm gonna hold them for him because I can't find anyone else to go with him and help him do it. But like it'll be like an hour. Like I'm not gonna be there all day working. It's not a good use of my time. It's not a good use of your time either. So be efficient, be smart about it. Okay. Have to shoot out. Thanks for the incredible content. Thanks, Warner. Appreciate that. Max says $500 for 5 hours work, $100 per hour just detailing simple fixes, possibly a larger profit but more time invested. $1,000 for 20 hours of work is $50 an hour. That's right. You flip cars, Max. That's a great way to do it too. Hopefully the internet's not still lagging. No lag on semi-formals then, which is good. Did you need a building permit for your shed? No, because it's under the amount of square footage for the bylaw. The shed is technically, there was already an existing shed there that I rebuilt on. I poured a new concrete pad and I rebuilt on it. The tiny house here was already existing. I just redid it. So technically, no. You don't need permits to do floors. You don't need permits to paint. You don't need permits to change cabinets. You don't even need permits to replace wet drywall and put it back on. Only if you change the vapor barrier or the insulation. You just gotta know the codes. Like, there are a lot of ways to do things without permits. I hate permits. I get them when I have to. I did have to get them for fire separation on my duplex right now. Another one of my properties, we got a permit. We actually got caught by a city inspector and forced to get a permit. But whatever, neighbors called or whatever, and that's fine. Like, we'll get it. I'll stay on the legal. We weren't planning to do a big renovation there, but it ended up becoming a big renovation, so whatever. There's still a huge margin. If you're buying with a $100,000 margin and $10,000 extra and contingency happens, you still make like tons of money. It's okay. Yeah, it looks like it's year end. Wi-Fi extender might help. I actually have Wi-Fi extender and I have one that goes over power, so I can connect to my main panel and in here plug it in and it'll go into wire through here. But I also ran, okay, Paul says, Mike, if you had two investors come to you with capital, would you entertain less profit on the sell and maybe charge more for a management fee? Any thoughts on that? Yeah, Paul. We do lower on the sale and we do like percentage of cash flow. If you want us to take like, 30-40% of cash flow and like none of the upside or less of the upside, we'd be open to that, of course. Whatever works. Like, some people want us to share the risk and they're really, really risk adverse. And so for them, the big thing is, finding, I'm in the tiny house. Mr. Beefy, I'm in the tiny house right now. So that's why. My daughter is probably going to sleep. I should probably end this. 121 minutes. This is the problem with doing it in the tiny house. I don't know when to go inside. I'm going to end this pretty soon. Message retracted, shredded. Thank you. Appreciate that. Yeah, guys, if you're watching this, go back like 2-3 minutes. You can get to see like my abs for a quick second. Snap, pause, like save it. There you go. Pretty soon it'll be a beer gut. I'm going to keep working out. Not going to lose that. I can't be that 40-year-old guy with dad bod. Would you recommend first getting a good paying job, but later on the side trying to achieve financial independence? Yes, I'd recommend working at a job first and then moving towards, yeah, I'm like 2 hours in. I should really cut it off. Are you for hire as a financial planner? Carolyn, maybe. For the right person, maybe. I honestly value my time a lot right now, and so it's tricky. Yeah, probably. I'd probably help someone out. How many people do you want to hire when you scale up big time, 10 to 100 million in cap? As little as I need. Probably like 10 or 15 people could get it done. Armin, a traditional job would be very helpful in your ability to get a mortgage. Yes, totally right. Mike must be yeah, Mr. Beefy, we read that question. Anyway, guys, I gotta let you guys go. My daughter's probably already in bed. I feel really bad. I let this go on for 2 hours. We're over 2 hours. Bye. Bye, guys.